How's it going, everybody? Welcome to TrendSpider Live. My name is Mike, and I'm joined again here with Tushar Chande. How is it going, Tushar? How has your day been?
Oh, very well, thank you. Good afternoon, everybody, and welcome to another session of all the excitement leading into earnings.
Yeah, absolutely. We got a few stocks reporting today. We got CrowdStrike, which you see right here on my screen. We got Marvell, and then we got OKTA. So if you guys are out there in the chat, go ahead and say what's up, say hello. Tell us if you guys are trading anything yourselves today or looking to take any trades, and especially looking to trade any of these earnings that you guys are here watching with us. But yeah, while we have Tushar Chande on here with us, maybe before the earnings come out, let's just take a quick look at the numbers. I have a couple of sidekick prompts that I have loaded up that I can show you guys so we can analyze the stocks sort of fundamentals, and then we'll have Tushar help us out with the technicals, because that's what Tushar really shines at with all of his technical indicators. And by the way, you guys, we're going to be using a bunch of the Chande indicators on the live today. You can see the power bands right here on my chart. And right now, TrendSpider is running the Cyber Monday sale as well. And thanks to Mr. Chande here, we're actually giving away like 4 different ones of his indicators for free if you sign up with the Cyber Monday sale. We'll go ahead and drop the links in the chat below. So if you guys wanted to check these indicators out for free, you can. A lot of them are paid. There is a couple free ones though, but we will drop the links down below for you guys to check them out right now. And it's a great time to take advantage of it because, I mean, these indicators are truly awesome because we're going to use them all throughout the live stream today, show you guys how NVIDIA is setting up, how different semiconductor names are setting up, CrowdStrike. So definitely, if you wanted to check them out, now would be a great time to follow along with them. So let me drop the link down below and post a comment. So the first one is the free premium indicators. There's 4. You can see the collection there. And then I'll drop the Chande indicators link, which will basically include all of them. Perfect. And let's see what Sidekick has to say. First of all, about CrowdStrike, CRWD. So I sent in this prompt right here. I just said, analyze CrowdStrike ahead of its earnings today. Summarize fundamentals, including recent revenue, EPS trends, price to earnings, all of that good stuff. So let's see what it has to say. It looks like revenue is growing pretty good, 18 to 20% year over year. You can actually see the revenue chart right up here at the top right. So it is indeed growing pretty well. As you can see, it used to be in quarter 2, 2023, they had a revenue of like 500 million. Now it's their last quarter 2, 2026 is at 1.17. So that's basically doubled over the last few years. Let's see what else we are dealing with here. Let's see, major business risks. We have a July 19th incident, ongoing customer churn, and contract renegotiations, different stuff like that. Some news. Let's see, profitability erosion. Looks like they had negative free cash flow in quarter 2 versus it used to be historically positive, which is interesting. Of course, competitive risks. And let's see, incident recovery metrics. Yeah, so basically, obviously, today's earnings is going to be one of the biggest catalysts, and the guidance, which we're going to analyze after the numbers come out, will be huge as well. And now, honestly, let's just take a look at the technicals. Chande, if you want to go ahead and analyze, I'll put you up on the screen if you're ready here.
Yes, I'm ready.
So we'll have Chande take a look at the chart for us. So what are we going to start with, Chande? The
Okay, so
daily chart?
yeah, so this is a daily chart, which is a good place to start. And I'm going to start by looking at the arch indicator, which is essentially the 60-day regression price channel. Down in the first channel below, we have the chats indicator, which is the Chande absolute trend strength. The scale is plus 100 to minus 100, so we want stuff in the green when it's trending higher. And then at the bottom with the yellow line, I have the Ishan indicator, which is a variation of the RSI, kind of, but geared more towards long-term trend following. So if you just look at the price channel here, we see that it's been drifting upward very slowly. There's quite a wide price range, and CrowdStrike is in the bottom 4th of the price channel. So it gives you a sense that it's been weakening a little bit. And the trend strength is also in the neutral region. So not really showing great trend strength at the moment. Now, if I look at Marvell, more or less the same picture. It's been trading in a very broad price range with a sort of a shallow drift upwards. Is bounced off the recent rebound, and then the trend strength now is in the green region, so it's got good trend strength, but not quite at 100. But the longer term momentum as measured by the Ishan indicator is still neutral to zero, so not really showing great momentum because it's still in a trading range. And then if you look at OKTA, it's in a distinct downtrend, and then the trend strength is in the purple region, so it's very weak. So the momentum is very weak. But the Ishan is saying that we've got a pretty good bounce and good momentum when you think of it just strictly as what's happening to price momentum. So a bit of a mixed picture for momentum, but definitely a strong downtrend. And if I just turn off the arch indicator and put on the para band indicator, just for reference, the light blue line is sort of a exponential adaptive moving average. And then we have 2 units of volatility up for a upside filter and only one sigma band below sort of a downside filter. So when the prices are below the lower band, we paint them the background red. So clearly Okta is in a fairly strong downtrend. And then you see these red dots, the prices have to come up and rise above the red dots to signal change in trend, because it's like a trailing stop for a short trade. Marvell is has bounced off and is just now testing the upper green line, and it's risen above the red dot. Let's just zoom in a little bit so we can see. You see that it has risen above the red dot, so it's broken. So the downtrend has been broken, but it hasn't really set up a full uptrend, and hopefully the earnings might boost it today. And then going to CrowdStrike, again, same picture. It's below the red dots, so it will have to rise above the red dots to sort of negate the downtrend. And then still trading within the bands. The momentum is neutral, momentum is neutral. So that gives you sort of a technical overview of where these three are today.
Yeah, OKTA is actually pretty interesting to me. If you click on that one, the Ishan really shot up recently, right?
Yes.
But the chats did not catch up. So I'm
That's
curious on your take on that. Like with chats so low, that means, you know, and obviously the bands is showing a short play right now, but Ishan's shooting up. Do you think that means that it's kind of just bouncing up and it might just be overextended, or maybe the start of a new uptrend?
Well, let's look at the blast indicator. So
Yeah.
the main difference between the Ishan indicator and then the chats indicator is that very different ways of measuring momentum and time frames. So chat says 4 fixed time frames, 25, 50, 75, and 100 bars, whereas in Ishan it's flexible within the range. And the range is somewhat on the, it's like on the shorter side, doesn't go all the way up to 100. So on a shorter time frame, it's saying we're getting a bounce. And if you look at the, this is the counter trend entry using blast, which is buy low with adaptive stop indicator. And the sort of green line here is the trigger line. And if I zoom in, you see that we've had some motion above the green line. So we've had 2 closes above the green line, and sort of the first close above, then a little of a pullback, and then now we are above the green line again. So shorter term, we're getting a counter trend buy signal if you want to use blast as an entry signal.
Right.
So that kind of correlates with the long-term trend still being down. So chats is weak, but the shorter term trend rebounding.
Yeah, no, that makes sense. It makes sense. And we have people in the chat. For one, someone's asking if you have an X handle. I'll go ahead and send them like your YouTube channel, probably, because I know you posted a video recently. So
Right.
there's his YouTube channel down below. And he's asking, actually, the foundation in chat is asking for your thoughts on Bitcoin and Ethereum. And I know we were just
Sure.
chatting a little bit about that beforehand. So maybe let's just go ahead and take a look there.
Let's take a look at that. So I'll put IBIT, which is sort of the Bitcoin ETF. And what I'll again, looking at the momentum indicators, they're minus 100, below minus 75. So the momentum is clearly down. And then if I sort of turn on, but we're just getting a little of a test of the entry signal, so you could potentially look for a rebound here in the sort of Bitcoin market. And then let me just put the para band indicator on and turn off blast, and you see that we are below the lower band and in the red region, so trend is strongly down. And then we have to rise above the trailing red dots to really get a significant move up or change in trend when you think of the pair band indicator. And the
Right.
ETH, which is the Ethereum ETF, basically the same picture. Ishan is minus 100, so strong down. We're in the red region, below the red dots, so strong down. But again, you're getting just a slight, flattening out and perhaps a rebound here. And then if you look at the other sectors like healthcare has retraced, has maybe turned down a little bit over the last few days, and healthcare was sort of the escape valve for the all the people that were trying to protect their equity or find an alternative when the market was selling off. So now we might be getting a reversal, because you see we have a rebound in the blast indicator, and then we have a turn or a sort of I guess a rollover in, say, the healthcare sector. Say Lilly is an example. We see we had a little rollover over here. So if you put the two together, and if you think of, say, Bitcoin or Ethereum as risk on, risk off sentiment measures,
Right.
then we were in a strong negative sentiment risk off mode. And now we are gradually perhaps rotating into a risk on mode.
Yeah, absolutely. That's something I've been eyeing as well, is that the rotation recently in the healthcare has been pretty strong, but just over the last, what, like week or so, maybe few
Right.
days,
4 5 days.
few daily candles. Yeah. So I'm curious on your take on when do you officially like consider like a rotation happening? Because like the healthcare has been rotated out of now for, again, like what do you say, like 4 or 5 days.
Right.
Um, but it's still above the stop losses,
Right.
right?
Right.
For
Yes.
mostly. So
Right. So now, if you use the trend following philosophy, the trend is up when we get a breakout, and the trend has not ended until it hits our trailing stop. So here we have a trailing speed. Let's just let me turn this off so we can uh, sort of clarify the idea. If you look at the yellow dots, the speed here is 1. So if I go over here and say the speed of 3, so it comes with 5 speed settings: 1, 2, 3, 4, 5, with 5 being the fastest. Say if I set 3, which would be sort of an intermediate to fast speed, you see that these yellow dots now were here. Now they're all the way over there. So if you wanted to be, a bit
right,
aggressive in saying, has the trend changed, then you would use a faster speed for the stop. And right now, you'd have to say that you're maybe right at the stop or barely above the stop. So tomorrow, if we go, say, make a new low, then it would you'd have to say that the trend has changed if you use a faster speed. So there's obviously this trade-off in terms of deciding whether the trend has changed or not. And the short answer is that you could use a speed of 3 and say maybe it has changed. And then if you want, if I go back over here and use an even faster speed like 4,
yeah,
let's see what that looks like. And sure enough, that got stopped out like say 5 6 days ago. So that would have signaled a potential trend change several days ago. But then it restarts down below, so you
right.
have to be a bit careful. So I generally try to use 1, 2, or 3, because I think that's a reasonable trade-off. And then if you still want to be a little more aggressive, what you could do is you could change to a, say, a 4-hour chart, and then the 4-hour chart would show you. Sorry, let's zoom in a little bit, and let's zoom in there. So again, you would have been stopped out as it was in the previous chart with a speed of 4. Then you'd have restarted, and now you would have been stopped out today. So depending on your inclination to be more aggressive or less aggressive, you could say that yes, the rollover has been significant, and then now you could look for a stronger rebound in the risk-on assets.
Yeah, no, that makes sense. That makes sense. Changing time frames, changing the speeds. That's very useful too. That you have the actual ability to, change the speed
Right.
at will on those indicators. So that just
Right.
shows how valuable, having access to these indicators can be, because most people don't have that just ability like on standard charts. Like you can draw like trend lines and stuff, but
Right.
having the ability to adjust and see different variations of stop losses super easy like that is very cool. And these are adjusted for volatility too, as well, right?
Right, correct.
Yeah.
So now the now let me take a step back. So the volatility based exits are a different type of exits, and I have those on TrendSpider as well.
Hmm.
But what these are like time and price based acceleration. So it starts moving, and the larger the gap between the stop and the price, the faster or the larger step it will take. So it's a different way of calculating the how you want to move the stop, but
Mhm.
it's a fairly aggressive way to move the stops. And as you can see, for example, I don't recommend this, but just to give you a sense for how things can move very rapidly. If I put four
Mhm.
over there, you see it just moves super rapidly, right? I
Right.
mean, if you're trading short term and you're happy to take multiple entries and exits, this is perfectly fine, because you can trade aggressively and possibly intraday. But it just tells you that you can sort of make these exits sync with your trading philosophy, and ultimately that's what we want as traders, right?
Yeah.
But we have some objectivity built in because the formula is doing its own thing, and your preference just drives how fast you want it to move.
Yeah, makes sense. And I just took over control of the screen real quick, just because
Yep.
I'm seeing some movements here on
Okay.
earnings so far. It looks like all of these earnings are coming out probably 5 minutes after the bell, but it looks like already we're seeing some nice 1 minute candles here, especially on
Okay. I'm gonna
OKTA. So
let's
let's
go to
take a
two
look
minutes.
here. Got about like a
Right.
2% move up so far
Right.
in OKTA, which is interesting. Let's see what else. We got
Oh wow,
CrowdStrike
yes,
moving up.
big bar up and Okta. So
Yeah,
that would give you an entry signal even on the daily data using the counter
right.
trend blast indicator.
Yeah, so it'll be great to see after kind of these moves happen, especially when the numbers come out here in a few minutes, how they translate to the daily chart, because that's really where the stronger trend signals are going to be happening.
Right.
And if you guys remember from the analysis a bit ago, Okta was pretty much on the brink of, well, it just broke above the counter trend signal, right? So if it
Yeah, perfect.
gets a continuation here, it looks like it's going straight down now, but we'll see. It'll be pretty telling
Well,
when the
that's why you
numbers.
just have to kind of let the initial,
Yeah.
the first 5 6 minutes alone, and let the market sort of let the dust settle just a little bit.
No, absolutely. Absolutely. Yeah. Market is closed. The market closed about 2 minutes ago, by the way, guys. And in about 3 minutes, we should be getting some numbers here. So I'm curious. Maybe I'll start a poll for you guys, at least for you guys on YouTube. Just saying, let's see. I'm going to start a poll asking you guys, or not a Q&A, a poll asking you guys, let's see. Does Okta have a double earnings beat? Question mark. So vote yes or no. I'm going to send the poll in now. Does Okta, or I'm sorry, CRWD, let's do CrowdStrike. CRWD, because that's like the main, biggest earnings today. Does CrowdStrike have a double earnings beat? That is the question. If you guys are out there in the chat, one, make sure to subscribe so you guys can see our future lives. Well, I'm sure we'll have Chande on again, and we have a couple other guests coming on for you guys this week. So make sure to subscribe. But yeah, right now we're just waiting for earnings to drop. We're looking at the 1 minute charts. Once the move comes out, we'll take a look at the numbers. Vote in chat right now. Let us know if you think CrowdStrike is going to have a double beat. Looks like everyone so far is voting yes, but we will see. Again, some movements again on the 1 minute chart. And once they materialize, we'll take a look again at the daily chart and see how the overall trend of these stocks is looking, see if the numbers beat or not. I'm curious, Shonda, I don't know if I asked you this last time, but do you take into account fundamentals at all in your trading? Or are you mostly just looking at the charts and
No,
technicals?
I just use technicals because I think fundamentals are no fun.
Yeah, yeah,
the
I
problem is,
kind of
I'm
agree.
not saying that the fundamentals are not relevant, but the time frames are not matching, right? Your trading time frame may not match the time frame described by the fundamentals.
Right.
So I
Yeah,
think it's not so much that they are not good. It's just that we have different time frames of analysis for my technical stuff versus the fundamental analysis.
absolutely. Yeah. If you're looking at fundamentals, for one, you can argue everything's technically priced in the second it comes out because everyone knows kind of the same thing. And then with technicals too, like you said, like stocks are generally like forward looking. And if you do run fundamentals on, depending on how you do fundamental analysis, I guess on something like Tesla back in the day, you would have messed out big on a massive trend where as you just look at the chart, or like Nvidia, stuff like that. Like people have been calling these like Nvidia the new Cisco, which we're going to talk here about pretty soon. It's just a completely different story. So There's
Yeah,
good
again,
and bad to each, I guess.
right. I think it's well. First of all, we have to recognize markets are random. We don't really know what's going to happen, a year out or 5 years out. So let's start with that. And
Yeah.
then the second part of it is that even the fundamental analysis is based on a lot of assumptions. It's a little squishy. The data are not super like strong, because if you look at the accounting statements, there are a million different ways to apply
Yeah.
the gap rules, and everything's
Yeah.
very squishy. But if you calculate a 50-day moving average, well, all of us will get the same answer because we're basically using
True.
the same data, assuming that using end of the day, and your data have been properly scrubbed, etc. But for example, if you calculate a 50-day moving average, 90% of the people will get the same value. Whereas if you do fundamental analysis, or say something based on the accounting statements, you can have many different points of view, because your interpretation of the rules or the accounting jugglery could be different.
Yeah, absolutely. I agree 100%. I do look at, fundamentals too, just to see what's going on. Like, I think, of course, like short-term earnings, it'll move the markets and affect technicals to an extent. But overall, like because I went to school for, for finance and stuff. So I learned a lot of like the fundamental side of
Right.
things, but not as much the technicals. And then when I started getting into technicals, it started to make kind of clicking, like making a little bit more sense as to like,
Right.
you're trading the price, like, not necessarily the technicals all the time. So
No, that's actually, you make a great point, Mike, because ultimately we're trading the price. We're not trading the accounting statement, or the,
yeah,
how should I say, the goodwill or whatever, or the, how are you going to write off the inventory, or, any
yeah,
other depreciation rule or something like that.
exactly, exactly. So it looks like we're getting some of the numbers out here. At least I see OKTA here. Let me go open Sidekick and have it analyze OKTA for us. 12.2. So send in this prompt to analyze the earnings, but we can see on our nice little news widget right here, we did get some numbers. So it looks like OKTA raised EPS guidance and sales guidance, and it looks like OKTA sees, so double beat in the guidance at least. And then it looks like we got an EPS beat, 82 cents, beats 76. Sales also beat. So we get a double beat on OKTA. So 742 million versus 730 estimates, and double beat on EPS, and they raised forward guidance. So, again, kind of classic example here. It looks like what's, a perfect earnings report. They raised guidance, they double beat, and the stock is trading down. It is currently down about 2.6%.
What does the market know that the
Yeah.
earnings don't say?
Yeah, exactly. So let's see. Maybe we're missing something. I'm running it through Sidekick right
Sure.
now. So we'll see what Sidekick has to say about the fundamentals for its earnings today. It'll give us some charts for revenue, EPS, free cash flow, and it is fetching the data currently. It should be done any second here. But again, looks like a double beat. While we're waiting for that, let's take a look at CrowdStrike, see if anything has come in yet. Doesn't look like the stock has moved much at all. Let's put it on the news widget again. Still not seeing numbers on our news widget quite yet, but here we go. So it looks like OKTA delivered a strong beat, again, on revenue and EPS. Looks like about 2% and 8% beat. And let's see. And that was compared to the estimates. EPS is up 22%. Looks like year over year. Revenue growth reflecting continued momentum. Interesting. And then, forward guidance, like I said, raised and
Didn't beat.
beat. Yeah, so that's good. What was that?
No, again, it's a great example of the earnings were strong and the prices are weak. It's like
Exactly.
mysterious.
Yeah. And people are out there always in the chat, they're trading earnings and they're like, oh, they beat, but why are they going down? It's like, it's just the fundamentals, can help, but at the same time, the price is always going to be the
No, and there's a
true
lot of
thing here.
short-term trading, and there's a lot of options actions.
Yeah.
So a lot of times, people may have put on large options position expecting a big beat, but the beat is not big enough. So now they've got to
Right.
sell or buy back. Generally they got to sell to protect their position. So there are all sorts of uh, sort of reasons that people are selling or buying or to adjust the potential exposure tomorrow.
Yeah, absolutely. And it looks like, yeah, it says market reaction suggests cautious optimism. And they're saying the bears worry about Microsoft's free alternative and decelerating growth. So that definitely could be something there. Guidance raise is the most important signal, which is good. So, solid overall earnings. I mean, the stock is down a little bit, but nothing
It's bouncing back.
insane. Yeah, it is bouncing back. Exactly. So let's take a look at CrowdStrike now, and we'll see. Oh, CrowdStrike had a pretty nasty candle down just
Oh,
a
look at that
second
bar.
ago.
Oh my goodness.
Yeah.
Wide range and indecision.
Yeah. Wow. It's
Bending
currently
lower.
going down pretty good here since close. Yeah, about like almost 3% at the low, but bouncing back a little bit here. Still waiting for these numbers. Keep refreshing. Oh, here we go. CrowdStrike EPS beats sales beat. So double beat. Again, CrowdStrike double beat and it's trading lower. So again, it's another classic kind of situation here. If you look at the daily chart, it's not too bad. It's a pretty big range, but overall, it doesn't seem like it's affected the daily chart a
Much
ton
right.
here.
And it's sort of the spindle, i.e., a very small open close range, so indecision.
Right. Yeah, and you see it's coming back up as we
Yeah.
speak right now. So it's, yeah, CrowdStrike double beat. Great to see if you're a CrowdStrike bull. And then what was the last one? Marvell. Marvell is interesting. Oh,
Oh dear.
Marvell is coming
Oh,
down
setting
pretty,
off.
pretty good. It looks like we're seeing
Almost 10%, I'd say.
Q4. Looks like they signed an agreement to acquire Celestial AI for 3.25 billion. And then they also beat EPS and beat sales, so double beat. But they recently signed to buy Celestial AI, which is interesting. It's a few $1 billion. That's more than like a quarter of revenue for them. So I guess maybe investors aren't loving that too much. I'll actually go and put this into Sidekick
That's
because
cool. And
that's actually
Sidekick
pretty
is just
interesting.
amazing, isn't it?
Yeah, right. Look at that. But yeah, Sidekick is incredible for analyzing the stuff in real time, but it's down 6% right now. If you look at the daily here, you can see, it was trading like quite a bit higher back early 2025 and had a nasty, nasty downturn here on Marvell. And it's really been kind of range bound, not really trending too well.
Mm-mm.
And yeah, it's not looking very good right now. So we'll see what Sidekick has to say. That's the beauty I love about Sidekick, Chande, is that I'm not really a huge, like, big fundamental guy. Now I can just tell it to Sidekick, be like, what's going on, It's
No,
pretty nice.
I personally think it's ridiculously awesome in terms
Yeah.
of all the stuff it can do for you,
Yeah.
and relatively quickly, and also saves you a lot of effort and gives you some analysis, some context, and you can of course disagree with it, but
Right.
it gives you, like someone, gives you an alternative point of view that you may or may not agree with.
Exactly. Exactly. And there's a few different personalities. We have like a Warren Buffett personality. We have different guys that you can ask that'll give you different opinions. And like you said, like it just might find something or an idea that you wouldn't have thought about that could potentially change your mind. And it can even help you with your technical strategies, help you
Yeah.
optimize your back tests. And yeah, we just dropped some chats for links to sign up for TrendSpider down below. Because if you do sign up today for our Cyber Monday extension sale, not only do you get Chande's indicators, but you also get Sidekick for free, or everyone gets Sidekick for free. You get 25 messages, but if you sign up now, you get 100, which is very
Wow,
nice.
that's
Yeah,
awesome.
yeah. So it's
It's
a great
it's
deal.
so fun. I just find it massively interesting and amusing.
Yeah,
It's just so much fun. It's like crazy.
yeah. No, I use it all the time. Like actually, like for my own trading, just for analyzing stuff. Like it saves a ton of time. Like it's honestly awesome. And if a lot of people say like, oh, it's just like Chat GPT, it's definitely not. It is incredible. Like when it comes to analyzing stocks and just the markets, crypto, anything that TrendSpider is data for, it's all connected right into Sidekick. And so it doesn't hallucinate. It's not going to pull some random article with some bad information. It's all data that we have on the platform that we pay
Right.
for.
No, that's and so I think of it more like Chart GPT rather than Chat GPT.
Yeah, no, absolutely. I was going to show everyone here in a second. I'll just do it. I'll put in the prompt right now. It can analyze your charts, and it
Yes,
can
it does,
also,
and it does a really surprisingly good job.
yeah,
it's really
right.
insightful.
So I'm going to say, analyze my current, what do I have? Believe it's Marvell chart.
Yes, you're on Marvel.
Marvell chart up. It is the daily chart. Check out the indicator I have on. Plot any recent news events and plot key levels on the chart that traders should be aware of. So now while it's doing that, let's take a look at what it said about earnings. The summary is right down here. Marvell delivered a solid Q3 beat and made a bold strategic move with Celestial AI acquisition, which it was about 3.25 billion, positioning itself at the forefront of the next gen AI data center interconnect technology, from a struggling semiconductor company to an AI infrastructure powerhouse is crazy remarkable, with revenue tripling and profitability surging. So it looks pretty good. Solid beat, and you're taking a big bet here, which maybe some investors are scared of. That's why it's selling off. But bull case hinges around continued AI infrastructure investment, and the bear case centers on execution risk, customer concentration, of course, competitive threats. It is a very competitive market, and potential AI spending moderation. So now it looks like Sidekick has plotted some stuff on our charts right
Oh,
now.
cool.
Let's see what it says. So for one, it plotted some news events. I always like to have it plot news events. You can
Right,
see a Q2 earnings miss is right here.
right,
They actually had a buyback right here on this candle,
right.
which is something that's buybacks are always great. Um, Nvidia earnings was marked the low, which is interesting. And then, of course, right here, the Q3 beat on today's. And let's see, it did mark this little consolidation zone. Let me take off this indicator so it's a little less messy here. Then it also marks some previous levels over here of
Right,
resistance,
right,
9370, which is pretty good actually. If we go ahead and
right,
extend this right, you can see that is definitely
right. Working as
resistance
resistance.
there. Strong support here. Let's extend this right. So yeah, pretty good. Pretty
Yeah,
good. And then consolidation zone.
yeah.
And this was all done by Sidekick, by the way.
That's
I did not draw any of
fantastic.
this. Yeah. And yeah, I marked the news events right there on the chart. So yeah, pretty solid beat on Marvell, but unfortunately, it stock prices came down.
I
So
think your discussion or your suggestion that their acquisition may have something to do with it could be, accurate simply because people were
yeah,
not expecting it and they're not sure how to
right,
factor it in. But on the
exactly,
daily chart, nothing much has changed, right? You're just getting
exactly. Yeah,
sort of
if you're just trading the straight, technicals, probably wouldn't be in right now if you're a trend follower. At least
right,
maybe right here you'd have taken a trade, you got stopped out there, probably made a little bit of money there.
right,
But ever since, yeah, not much going. And it did start, broke above that high band
right.
just briefly.
Just
Just
briefly. So it
briefly.
started the white dots. So
Yeah.
it's saying the trend is up. So
Yeah. Yeah. So interesting move there. We took a look at Marvell and OKTA right so far. And has CrowdStrike made any move? Look at the move on CrowdStrike is
right.
interesting. It's been consolidating here.
Yeah, and it's
The
broken
1
up
minute.
decisively above the most recent consolidation. But look at the noise in the
Yeah.
after hours trading, right?
Yeah.
That's why you have to like
Absolutely.
let it settle out because it's just
Yeah.
like a like a tuning fork. It's vibrating
Exactly.
around the previous close.
And I don't think, yeah. Let's run the same prompt here on CrowdStrike. And then after that, you guys stick around for after this because we're probably going to cover NVIDIA and comparing it to Cisco back in 2000. I know it's been a big topic over on social media, and I'm really excited to see Chande's take on it and get his take on whether or not NVIDIA is going to be the next Cisco. And when we say the next Cisco, if you didn't know, Cisco back in the .com bubble
Yeah,
bust, pretty much ran super crazy like Nvidia is doing at the moment, but then it crashed about 90%. So yeah, we're going to take a look at that as soon as we get these CrowdStrike earnings reports for you guys. And it looks like, yeah, most of you guys are right. Let's take a look at the numbers here. We did have, again, a double beat. So if you voted yes on the poll, you were absolutely correct. 76% of you guys voted yes, CrowdStrike was going to have a double beat.
Excellent. Crowd is right.
Yeah. No, surprisingly, our audience is almost never, like, I've been doing these polls for like a week now, maybe, and it's generally they've been getting it pretty good. So congrats to you guys out there for guessing earnings right.
That's very good. That's really very good.
Yeah, for sure. Let's see if Sidekick has anything yet. Not yet. But yeah, as you can see, just pretty much chop. I mean, closed around 516. It's like $2 lower than where it closed at.
It's like a nothing burger.
Yeah. So double beat, like I said, 62% beat on EPS, just a 1%, 2% beat. Year-over-year revenue growth is great, though, 22.2%. You can see it's been growing every quarter, year-over-year. In line to slight beat on guidance, so it's or for quarter four at least, but full year guidance was both raised, which is really good. Yeah. So you can see that revenue growth trend is incredible. EPS is interesting, kind of choppy. Let's see. Deeply concerning free cash flow trends, though, which is interesting. It looks like free cash flow has been negative for the last 5 quarters, which, they're burning cash, but their revenue is growing. It's, classic earnings or growth stock stuff. But bottom line, CrowdStrike delivered a great EPS beat and raised guidance, but the underlying fundamentals show significant stress, mostly because of the free cash flow collapse. Company is burning cash to maintain its growth. That's kind of the story with a lot of different growth names.
Yes.
So, we'll see how it goes going forward, but overall decent beat, decent movement from all of these stocks. Maybe we can go and quickly take a look again at the daily charts. And if you guys are in the chat, if you guys have any questions while we have Chande on, now is the time to ask them. Chande did trade back in, the .com crash like many years ago. He has a lot of experience under his belt. He's coded a lot of indicators. So definitely, if you're out there, you have any questions about the markets or these earnings, trends, anything, let us know in the chat. But you want me to go and give you the stage, Tushar?
Yeah, sure, let's do that.
There you go. You are up there. We'll take a look at these earning stocks on the daily chart. Now that they have reported, they've kind of, settled in a little bit.
Yeah, now is a good time to look at it. So I'll first start by looking at the counter trend view. That is, if you wanted to buy these things from a counter trend point of view, regardless of what the main trend was doing, then what would you think about? And then this is the blast indicator. So it's like buy low with an adaptive stop. So the green line here is the trigger line, and then the trailing stop is the yellow line with the orange dots, I guess. So whenever the prices move above the trigger line, we get a signal. And of course, there's some flexibility in terms of how do you define how far above you want to be. But I certainly would like a close above the line rather than just high above the line. Because, for example, here, if I just zoom out, you see we got a high above the line, but that really wasn't the signal. This is the first close we're going to get. We got a close yesterday. And one thing to remember is that with this particular strategy, you have to have very good risk management, because, for example, some news comes out, you can open below your trailing stop. So you have to have a trailing stop in there. But purely from a speculation point of view, you're potentially getting ready for a rebound here because you've closed above the trigger line.
Yep.
On Marvell, same idea. We've been 1, 2, 3, 4, 5 days above the trigger line. So we've been long for several days. Now we have a bit of a reversal today, but hasn't really come down and hit the stop. So potentially, if you're just following the trend line, you'd say, well, we have a lot of room to absorb the volatility. If you don't want to absorb the volatility, then of course you'd have to go to, say, a 4-hour chart or a 2-hour chart. And then on a 4-hour chart, you see that you'd have an exit much closer to prices. And maybe you're a short-term trader, you say, okay, I'm going to move on and find something else, and that's okay too. But I'll go back to the daily here, and you see that it may seem like a big bar on the 4-hour chart, but it's really just just a bar on the in the daily evolution. And then
Yeah.
Okta, same thing here. We had the close yesterday, so potentially you're long. Now we have this very indecisive chart where we made a huge high and a huge low, so large intraday range. So that typically means that there's indecision, strong potential that you might get stopped out. And then if you look at a 4-hour chart, you can see that you would have been stopped out simply because we got this very big bar after the earnings.
Yeah.
So again, if you want to think counter trend, then you still say that, okay, I got a potential reversal here because I got several closes above the trigger line. And then if
Yeah.
I change the indicators and say just go back to basic trend following, and I'll put on the momentum indicators down below, then you'd have again, you see that you're below this trailing stop here, so the trend is still down for Okta on the daily chart using the paraband indicator. The chats indicator, which is a longer term, say 7,500 bar momentum, definitely still negative. So
Yeah.
no reason to buy long. And then Ishan went up there, but has come down again. So really, if you just look at this trading stop on a daily chart, you'd have to say that the trend is decisively down, and unless I get a movement above this, there's nothing to do. And even then, it's going to be neutral. And if you're a strict trend follower, you want something over there, so you just
Right.
ignore it for now.
So if anything, counter trend, it looks like for most of these.
Right.
Yeah.
And then here we are in the neutral zone again. We rose above the red dots, sort of went above the upper band. Now we have a potential, this consolidation back into the band region. So it's just consolidating. There's nothing to say as such. Neutral momentum, and Ishan is still showing negative momentum. So that sort of adds up to being in the neutral zone between the bands and not really doing anything decisive. And then
Yep.
for CrowdStrike, a little more interesting. Ishan still neutral, chat still neutral, but maybe moving up a little bit. But we're still below the red dots. If I just zoom in and expand the scale a little bit here, you see that we are still below the red dots. So still basically neutral. Trend is down. Nothing will change until we get, say action above here, above the trailing red dot, say 530, 532, something like that, 534, something like that. So
Mhm.
sort of neutral in all three of them,
Yeah,
from a
it
trend
is.
following perspective, of course.
Yeah. So no clear trend. Most of the earnings did have a double beat, so that's good. If you're a counter trend trader, maybe you can trade that. But yeah, as Mr. Chande said, pretty neutral on all of them. So that is the earnings for today. And now I know, Tushar, you wanted to cover something else, and I think a lot of other people would highly benefit from this. I'm looking forward to this as well. But basically, what people have been talking about online is whether or not we are currently in an AI bubble. People have been specifically saying that NVIDIA could be kind of like the next Cisco, which back in the dot-com bubble dropped around 90% from its peak after running up, kind of like how we see NVIDIA running up in this AI boom. And I know, Chande, you were actively trading, like for a fund, or you're a CTA back in these days. So I figure you probably have some good or some crazy memories of stocks like Cisco back in the day. So you'd be an awesome
Well,
person to ask.
sure. I
So
was
yeah,
mostly a futures trader, so of course, I was
got
aware of
it.
what Cisco was doing because
Yeah.
the business magazines had people on the cover talking about Cisco millionaires. All these very smart-looking guys, who had made lots of millions on Cisco.
Yeah.
Um, what I'm going to do is let's say let's just turn everything
Here.
off.
I guess just the overall question is do you think Nvidia is the next Cisco? Is that
Right,
the way you would look at it? Do you
right,
think it's going to drop from its peak, or just in general, how would you go about trading
right.
Nvidia today?
Right. Right. So let's start with that. So if
Yeah.
you look at what's been in the press or in the media, uh, people who are, I guess, counter trend traders or uh, value traders or Nvidia bears, they've been trying to make the case that Nvidia looks a lot like Cisco, and they put on short positions before they disclose this logic. So we can question their methods, we can question their motivations, but that's sort of irrelevant for us. We just want to look at it from a purely technical point of view. So I said, well, we know what happened to Cisco because we have the chart and we can look at it. So let's just do that. Let's go back and think about Cisco as a purely technical analysis challenge, and let's see what we can learn from that. So let's do that. So this is weekly data for Cisco, and then let's just expand this a little bit, and let's do one more thing. I'm going to change the watermark to something darker so it's not quite as prominent. Okay, so what happened was that there was this big push to build out the internet fiber network, tremendous demand, and the stock was having an unbelievable move, and then it eventually topped, and then over the next couple of years it came down to, say where it was, say 2 years before the run. So what the first thing I want you to remember is that we know what happened to Cisco because we can look back on the chart, but in real time, if you were here or here or here or here or somewhere over there, there was no way to know that this big decline was coming from a purely technical analysis point of view.
Mm-hmm.
So the first thing to remember is that we don't know exactly what NVIDIA is going to do, but we can use some technical analysis tools to help us. So that's the first point of view. The second thing is if you just look at this chart and you say, well, what happened? It went up, it came all the way down. So clearly, buy and hold is not the right strategy if you want to say that Cisco is a template for what NVIDIA might do. So I think that's
Right.
a useful lesson. Then the second point, then the question becomes, where should I get out? And the short answer is, let's look at Cisco as a template to see where you might have gotten out. Because remember, in real time, at this high, there was no way to really know that this was the absolute high of the move, and you didn't know that until 2 years later, right?
Yep.
So let's do something very simple. I'm just going to put a SMA, sorry. So I'm just going to put a simple moving average, and I'll just put a 50 bar, simple moving average, and we'll just use that. So if I just put a simple 50-week moving average, which is a very standard indicator, there's no optimization, there's no unique insights. You would have exited, say, well after the peak, maybe a year after the peak, right?
Yeah.
But
Not a bad exit.
not a bad exit, but
Yeah.
okay. So then you can say we can do the same thing. We can take weekly data for NVIDIA and put a 50-week moving average. Okay, fine. Very reasonable thing to do, and absolutely no problem using that. Now let's do the PALS indicator, and let's just close this. So now this is an indicator which does parabolic accelerating stop. It doesn't know anything about what's happening in the fundamental domain. It uses a 10-week upper band or upper channel and a 20-week lower channel. And then it uses this accelerating stop that looks similar to and is inspired by the parabolic SAR logic, but the SAR logic has its own quirks, and here we're only using the long side part of it, if you will. And if you look at the exit there versus there, you got a much better exit from a purely
Right.
technical analysis point of view.
Yeah.
But at the moment that you exited, you didn't really know that this was going to be a great exit until 2 years later, right?
Exactly.
So
Yeah.
this is an example where if you want to use technical analysis, then you have to use it dispassionately, because I'm sure if you I don't know this for a fact, but I'm sure there's lots of media about how uh, Cisco was going to keep growing for the next 5 years or whatever. So that's an example of where the fundamental analysis might be saying it will be there, but it ended up
Mm-hmm.
being there. So that's an
Yeah.
example of just using in an exit strategy that's a bit more responsive and sensitive
Yep.
than the simple 50-week moving average. So
Yeah.
then we're going to go back here, and let's turn this off.
So the bottom line here,
Right.
definitely, Chande, is that buy and hold is probably not the best and safest way to trade these. Like, you have to have some sort of exit signal in place. It's
Yes.
basically like the main kind of trend following principle that you really need to keep in mind, because
Right.
it's going to be trending up until it's not. Like, whether or not it dumps 90%, who knows?
Right.
But having
Correct.
a time to get out a system is very important.
Right. So what we are saying is that technical analysis gives you a rule-based approach to exit the trend, but it doesn't necessarily tell you what's going to happen, 6 years later or 3 years later or 2 years later, because it's not designed to do that. Right.
Right.
Now,
Yep.
this is the para band indicator, and I put it on for two reasons. First of all, again, you see that it would have given you an accelerating exit that maybe not as maybe a little bit below the PALS exit, but still would have been a pretty good exit. And then here, when you even if you didn't get out there and you didn't get out, say on even the 50-week moving average, down here started painting the area red. So surely you had a reason to get out, right?
Yep.
So purely from a technical analysis point of view, this indicator told you that, hey, the trend has turned lower somewhere over here. So even if you didn't get out here or there, you still had a reason to get out here.
Yeah.
When the color scheme went from green to red. So again, another dispassionate measure. And again, same problem. Even if you say exited here, you didn't know that it was going to go substantially lower. So the fact that you exited using some technical rule doesn't mean it tells you whether it's going to be a year later, but it gives you a rationale for exiting the trade, right? Exiting the
Yeah.
position.
And that's the most important thing, especially if, focused on risk management. Like if you're just sitting there buying and holding, you can ride the whole wave up, and, a buy and hold investor, they would have given back all the gains.
Correct.
So
And then again, if you know, my suggestion is you should be able to make your own decision whether you use my indicators or a simple 50-week moving average or whatever, but at least it's your choice and it's not being influenced by somebody else saying that, oh, it's going to keep going higher or keep going lower, or as the case may be,
yeah.
right?
Yeah.
So you're getting a chance to make your own dispassionate decision with the understanding that the market, for example, you could have exited there and it would have kept going higher. So the exit may turn out to be not the best point to exit, but you're still out of the position.
Yep. Yeah, you take your risk out. And as you can see, there's a few different yellow dotted lines there, which were exits that were triggered, but then you would have got back in and rode that uptrend up. So yeah,
And
I
then
guess when you're trend following, sometimes you're going to get out and get back in, and that's just kind of how it goes, right?
right, because again, to take a step back, like we're not trying to pin the exact high of the move because it's really difficult to do that. But
Mm,
we know that after it makes the high, it came back down and hit my stop. So there must be a potential trend change, right?
right.
And I'll just put one more thing on here just to give you a sense for it. So again, you can see that I've got two different speeds here, the white dots and the yellow dots. And by changing the speed, you could have altered your exit location and timing, how soon and how close to the absolute high of the move. And then, of course, the wall-based exit would also possibly gotten you out closer to the exit. But if you look at the yellow dots, you exited, say, 2 months after the absolute high of the move without actually knowing that that was the absolute high of the move, right?
Right.
Because you only know that months later that, hey, that was the absolute high of the move, right? But
Yep.
on the
Makes
other
sense.
side, like you may have exited here, and then you'd have to re-enter, and possibly if you're using the white dots, you'd have exited there, then you have to re-enter. So there's this balance between if I buy and hold, I don't have to worry about re-entry, but if I buy and hold, I still have to worry about the exit because I could hold too long.
Yep, exactly. And these, by the way, guys, are Chande's own custom indicators, and you can find them all using the links down below if you wanted to check them out. It is our Cyber Monday sale over here at TrendSpider, and you can try a lot of them for free. Some of them are paid, some of them are free, but use the link down below and you can check them all out. They're very useful, especially right now. You can access them for free. So you definitely should take a look at that. And so, yeah, this was Cisco Chande.
Right.
And now I guess the question is, how does the same stuff look on NVIDIA?
Okay,
The,
let's do that.
yeah.
So this is, let's go back and put that on, and let's put that off. So this is the paraband indicator with the two exits, the white, yellow, and the white.
Mm-hmm.
And you'd be out of NVIDIA now because it would have hit your trailing stop, and you'd have to reinitialize an entry depending on when it makes a new high, if and when it does. But obviously, if you were using a longer term exit, you'd still be long because you've not hit a trailing stop. And for those who say that NVIDIA is the same as Cisco, this is sort of a 2023. This is down here is where we had the big move after the disclosure of the ChatGPT sort of explosion, if you will. And
Yeah.
you see that we got stopped out a number of times, i.e., the NVIDIA rally has not been as consistent and persistent as the Cisco rally. So
Interesting.
that's just another reason to say that it's had a rally, but Cisco rally was more powerful than the NVIDIA rally, which almost seems hard to believe.
Yeah. Yeah, it is. It sure is. But yeah, that dot-com bubble was crazy.
Oh,
So I
and
mean, but
I
like you
probably heard
said,
about it.
it's still a very pretty strong uptrend. But like you said, it's been a little bit more choppy on the way up. Still making money, just a little bit more choppy, at least compared to Cisco specifically. So
Yeah,
I guess the answer really is to not necessarily predict whether or not Cisco and Nvidia are going to be the same, or if Nvidia is going to drop 90%. It's just to have an exit strategy in
strategy.
place, right?
Right, exactly. And something now, let me take a step back. It's fine for me to show you, these white dots and yellow dots, and wow, they move so wonderfully.
Yeah.
Even if you just use a 50-week moving
Yeah.
average, you have to execute on that exit, right? I
Yep.
mean, let's say that it comes back down and hits your 50-week moving average. Are you going to get out? Are you going to find some rationale to not exit, right?
Exactly.
So it's fine to plot all these wonderful things, but ultimately, as a trader, you have to execute on it. And the question is whether it's a simple week, if you're a simple moving average, or something more dynamic, would you physically execute and take the trade and sell the position?
Yep. And
And I
it's
think,
a big thing. The psychologicalness behind it is like, when it's come down, some people like to, buy more, like, buy the dip and stuff like
sure,
that, which is kind of like the inverse of what trend following is.
sure,
But I actually did want to show everybody something here too, is that if you have these indicators, I just took the charts over real quick.
sure.
On TrendSpider, you can actually set alerts. So if you're using these white dots here for your trailing stop, this is one of Chande's
Oh,
pair band
excellent.
indicators. You can just right click, create an alert at the line, and then you can set it up to, if it breaks through or even just touches that
Right,
line. You don't even have to sit there at your chart and check
right,
it every day. You can use a daily confirmation or like something lower, like 30
right,
minutes. You can set the alert to expire in a few months from now, and
right,
you can even actually, if you're in this position in your broker and you have TrendSpider, you can use Signal Stack. You just put a note here, just like sell or close NVIDIA position. Signal Stack will give you the exact note. And if you go and create this alert, then it actually automatically sell the position for you from your actual broker, as long as it connects with Signal Stack, which
right.
plenty of them do.
And
And yeah,
You made a really, really important point, and that is the action in action sort of tension. Because you might say, "Oh, I sell today, and maybe it'll bounce tomorrow." Yeah,
hmm
it could, but that's not the point. The point is, we're taking a big picture view and saying that if it comes back and hits your trailing stop, regardless of how you calculate it, you should exit the position.
right. You got to respect the stop, no matter what, 100%. So yeah, I'm looking at NVIDIA right now, and on my parabands indicator, it looks like it's still in for me.
Yes, it's
Yeah.
so
So
the trend is still up, and maybe as we talked about, the semiconductor slash AI trade stocks have bounced the last few days. So hopefully the bounce will continue in December and take us to new highs. Uh, I mean that's the hope, but until it happens, it has not happened.
yeah, no, absolutely. And yeah, someone made an interesting comment down below. They're saying they're selling covered calls on NVIDIA every week. Curious if you've ever dabbled in options or covered calls or anything like that in your trading.
Yeah, I traded options a long time ago, but that time trading options was very expensive, so I never really got into it.
Yeah.
And then now option trading is way, 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 way cheaper.
Oh, I
So
see.
yeah, it will be more thing. Now again, you have to remember there's a certain cost to doing business. There's a tax implication of doing that. And suppose you like what if you sell a covered call? What is that, right? So you're giving somebody else the right to take away your shares. So you have
Yeah.
to be willing to give away the shares of whatever the strike price is, et cetera, et cetera. And that's fine. I mean, that's certainly a strategy. And if you're lucky, it'll not be hit and you'll continue to hold the position. But I think the fundamental tension we have is, you'll have a news headline that said, if you had owned NVIDIA for 10 years, you'd have made whatever zillion profit. And then the other headline is, oh, if you're holding longer than 10 minutes, you're already a long-term trader. So there's
Yeah.
inherent tension of holding it for the long term versus the short term, and I
Yeah.
think that's what we are to resolve.
Yeah, absolutely. And yeah, I think with the thing with covered calls and trend following is they're kind of not opposites, but they kind of like negate each other, because if you're trading video down here and like sold a call down here, you're like, it's $55. Like, yeah, sure, I'd sell it, at $80. Sure. But then it goes up, all the way to 181. You missed a lot of the trend. So I
Right.
think, I guess, being like smart, like I guess not necessarily trying to time it, but trying your best to avoid getting called away is probably the best thing to think of when it comes to covered calls. And just know that you're limiting your potential upside potential, and just have to accept that, I guess, you know.
Right. And again, if you have many shares of Nvidia, you could say, I'll use 10% of my shares or
True.
something, and that's different.
Yeah.
But
Yeah. You got like 1,000 shares, you know, sell a couple calls, you know, just take some profit off the table. That's a good point. A very good point.
and again, you got to remember that you always have to be prepared for the worst case. That is, your position is closed out against you and the market reverses in the other direction. So
Right.
that's going to happen. And the longer you trade, the more often that's going to happen to you.
Yeah. I mean, you see it even here on NVIDIA, like it's been, you know, trending, like you caught a massive trend here,
Right.
got out there in the bottom of August,
Right.
potentially, you know, got back in kind of right away back in October, and then, you know, got chopped out there, and then
Right.
had to wait, you know, you sold down here, and then it's telling you, you know, buy back up here, but now you're back in profit again. So, you know.
Now again, you have to remember, like suppose you got stopped out in the April, say in early April or late February. Now with all the negativity that was in the headlines after the April sell-off, it's hard to get back into the market when Nvidia comes in and starts making new highs or enters the green region. So again, technical analysis easily in retrospect it says, yeah, oh, of course we should have bought over there. But in real time, it was harder to buy over there because there's all this negativity and it's not at all clear. Well, and some people said, well, it's going to go down and retest the lows and whatnot, whatnot. So again, my point is that if you listen to the market, you're getting all these conflicting messages all the time, every day for the next 15 years. So you really
Yeah.
have to have a process where you're going to say, I'm going to trust the process. I'm just going to follow my rules. They're not going to work perfectly every time, but neither does the advice of the market, And if you, here's the way to look at it. If you polled 1 million people every day about what's going to happen to this or that, some percentage of them will always be right. But your challenge is which of them, which other people in the percentage that are going to be right.
Never know. Never know. Yeah, absolutely. And yeah, someone in the chat, they're asking opinions on Amazon. So I guess we can pull that up.
I have a really fabulous chart. Let me show you a
Yeah, I'll
fun
put
chart
you
of
back up.
Amazon. So I'll show you a fun chart of Amazon. So
Let's do
let's
it.
have fun for a moment. Let's just have fun for 1 minute. So I'm going to put a monthly chart of Amazon, and this is these blue lines are essentially the Fibonacci extension. But Fibonacci can be extended to like many levels, and I've extended it out. And this goes way back in 2000. And you see that
Oh,
miraculously,
wow.
it always hits resistance and support near
Yeah.
these Fibonacci extensions. Now, why I don't know, but it's like magical because it always hits support and resistance near these massive extensions
Yeah.
of Fibonacci that we never think about.
Yeah.
So
No,
that's just
absolutely. And those are from what, you said from 2000?
yeah, something like that. I'll have to
Wow.
go back and
Very
look
cool.
exactly. I was just playing one day. I said, well, we normally don't really do these ridiculous like 47 times or 20, 30 times
Yeah.
extension. So I said, let's do it. But it works for whatever reason. Now, don't ask me why, but it's kind of a fun chart.
The Fibonacci sequence, right?
Extend it to forever, right? Because
Yeah.
you're 47 times whatever. I mean, who's
Yeah.
going to ever think about a 47
Crazy.
times extension?
I know. Yeah, that is fine. That's a great chart.
I
Great
mean, it's
chart.
just a fun chart.
Yeah.
I'm just saying. Sometimes when you're doodling and wasting time, I do these silly things.
Yeah.
Anyway, that's for another dime, another dollar. So if so, the way I would look at it, I first put on the chats indicator, right? Just this is daily data, and I put on the chats indicator. So the chats indicator is a measure of momentum, and it was making new 100-day highs. I'm going to be up here. I'm making new 100-day lows. I'm going to be down there, and it combines a bunch of other things, whatever. So if you could plot like 30 different indicators and collapse them into a one thing, that's what the chats indicator is doing. And right now, when it broke out here, I got a values near 100. Now it's down and is neutral. So just from a momentum point of view, it's neutral. And then if we go back and look at the parallel band indicator, this is our sort of general purpose. Let me turn this off. This is our general purpose momentum indicator. And let me just zoom in here. And then what are we seeing? This is the green band. We got a breakout above the green band and a reversal, got stopped out. Then we went below, so we got the short side signal. And now we have just crossed above the red dots here. So we're just getting a change in trend potentially, but we need more action here to really get excited that we're getting a long-term trend. And then if I change to weekly data, which gives us a little bit more of a decent longer-term look, almost the same answer in the sense that we had this little move up, we got stopped out, and then maybe a re-entry, got stopped out. Now we have to wait for something more exciting to happen. And if you really, really want to be conservative, then you'd have to say that you need to get lows above this high before you really need to take the trade. So I would say that I would really just ignore Amazon for now. It's not doing anything to short that you could do something with the next many weeks. But on the other hand, we change our perspective and go back to say, a 2-hour chart, then you can say that, well, we're just getting a little breakout with a tight stop, so you could potentially buy it, say, somewhere over here, and then have a pretty tight stop available. And you see with a very nice downtrend, we got stopped out there. As soon as we got above the red line and neutral area, now we're starting to trickle up. So it sort of depends on whether you want to trade, what's your underlying time horizon, whether you're willing to trade on a 10-minute chart or a weekly chart or so forth.
Yeah, absolutely. And I'm looking through kind of like the Mag 7 stocks,
Right.
Google. I see Google, if you've seen that one. That was in a great uptrend. It's been on the daily chart really in position for quite a while now. So if
Yes.
you guys are looking for like a Mag 7 stock, to follow the trend, I'd say like Google has definitely
Google's
been the one.
defending amazingly well.
Yeah,
You can go to PQQ. QQQ had a great trend,
true.
but I would change that to a 1, because instead of a 2x, use a 1x band, just because it's an index, so we need
Yeah.
it moves up. Once it starts moving, keeps going. And then if you want to be conservative, what you can do is you're just going to trade the bands and ignore the trailing exits, the yellow dots, and say, I'm just going to get out if it hits a lower band. So you could have gotten there and then exited there. Now it's just rising above, so it's a long entry, and you'd be long. The yellow dots are there, and then see where it goes. And potentially seasonally, we the market could rally into May of next year, with some bounces along the way. So you can argue that we're getting a re-entry at a good point at QQQ. We're seeing a breakout above the into the green region, and now we have a trailing stop.
Nice. Yeah. Yeah, market's been looking pretty good overall. You see the QQQ's bouncing up. Apple is another
Oh
one
yes,
that's
let's go to
trending
Apple.
pretty well.
So Apple again is looking really good. Let's go back and put on the Ishan indicator and the chats indicator. So if you look at the chats indicator, the orange line, it's been in the green region. Now it's up near 100. Ishan solidly near 100. So strong momentum is making new highs. So life is good. We have a trailing stop. And then for those who want a little bit longer view, you can always look at weekly data, and we'll just close the list here. So we'll clean it up. And you see we had this very nice breakout. And now it's sustained the breakout because it's gone above this important high over here. We had a little bit of consolidation just here, you see, against the old highs. And now we've gone above the old highs. And if you are, we've got several lows above the old highs. So this breakout will clearly persist. So yeah, Apple would be a very nice play, or a nice consider candidate for a trailing stop, or a trailing position, for a trend following position.
Yeah. And I don't know if you saw recently retail. So silver broke out recently, but also
Yes.
retail XRT, like stuff like A&F, like Macy's, KSS, Kohl's, they all flew up
Yeah,
pretty
but I mean,
recently.
on a weekly data, let's look at daily data.
Yeah, the
Yeah,
dailies.
yeah. Well, what's quite a bounce. Yeah, on a daily data, you'd have to. So, okay, let's just zoom in here. And so we're in the green region. There's momentum. Ishan's 100, definitely momentum. But now what?
Tushar, real quick, can you open a watch list just so your faces we're or no, not that, just a watch list or anything on the right sidebar, just so it's there. Yeah,
Okay,
that's perfect. Just so we're out of the way of the chart there. There we go. Perfect. Thank you,
okay,
sir.
all right. Yeah, all right, no problem. So now I would just be a little cautious here, and I say that there's just a hint of overhead resistance here.
Yeah.
That's gone back several months, right? So we'll say, okay, the market will probably overcome this resistance, but we'll give it the benefit of the doubt. And if you really believe in it, you might get a pullback, say towards, say, somewhere down 85, 86 in this region. Then you could consider that as a counter trend buy, simply because it's just meeting some overhead resistance. The
Yeah.
trend is up, trend is up. So just a matter of trying to find a better entry point. Otherwise, you can just go ahead and buy it anyway if you're inclined. So yeah, definitely. And if you look at, say, AVGO, they had much of the same kind of structure. They had the strong up bar. Now they're backing off a little bit. So that's the kind of thing you got to look for in ANF, whether it's going to back
Yeah.
off a little bit.
Yeah.
And
Makes
then
sense.
XRT, XRT is not it's getting there, but hasn't really broken out decisively. And again, remember, we have some nearby resistance at 90, so traders are going on 89, 35. Traders are going to be pushing against it once it gets there. But and still, Ishan's just coming out of the oversold region, and not really showing strong trend up here. So XRT as an index, probably can wait a little bit. But you mentioned silver. So silver, again, very bullish. Has broken out very decisively. We've got two lows above the prior high. This important high. So definitely that confirms that we have a strong breakout. This is daily data. And then Ishan's at 100. The chats indicators at 100. So momentum wise, it's sort of reinforcing the breakout or confirming the breakout
Yeah.
that we have here.
Absolutely. Yeah. Great stuff. Great stuff so far. I'm trying to see if I can get the CrowdStrike earnings call. It starts in about 4 minutes.
Okay.
So I might play it. We'll probably
Okay.
hop off
Okay.
since then.
No worries.
But yeah, if you have any final comments, Tushar, or if anybody has any questions in the chat for Mr. Chande, definitely let us know. But yeah,
Yeah, I mean, I'll just show you one more chart. So let's look
for
at
sure.
V1, which is Vanguard Russell 1000 ETF. So this is sort of like is the market broadening, and
Yeah.
so we're just looking beyond the S&P 500,
Right.
large cap universe, and this is still large caps, but it's 1000 as opposed to 500.
Right.
And you see that we have, again, we're in the green region. The red dots have started, but Ishan's still a little oversold from the sell-off, and this is not quite at 100, but we're getting a little breakout. We need to get above the 312 area. And then V2, which is a Russell 2000 ETF, is also showing the same kind of, it's just beginning to break out a little resistance today. So, we're talking of risk on versus risk off, and the V1, V2 are a good overall measure of where the market's going.
Absolutely. IWM, the small caps, definitely a good measure. Great point there. So yeah, small caps are sitting nearly at all-time highs, I believe, there on IWM, which is pretty interesting. Especially, we have FOMC coming up. Was like
Right.
next week already. We'll see if the interest rates are cut.
Yeah, I mean,
which could benefit them.
If you're if you want to trade into next year, I would just wait for the Fed to go through. You only have a few more days. The market will kind of might rally into the Fed, but there's always some volatility based on what the Fed does. So
Yeah.
just to be cautious, you can wait for the Fed to finish up, and then you'd be good for the rest of the year.
Yeah. No, it makes sense. Yeah, it's the last FOMC meeting of the year.
Correct.
Here in about a week or so. We'll be going live
Next
for that.
Tuesday, Wednesday, right?
Yeah. So yeah, it should be interesting to see what happens. I believe it's still projected for us to cut rates by 25 basis points by most people, but we'll see. You never know, but that is what everyone is currently projecting.
Yeah.
So should be
But
good.
just to answer you, IWM is also below the old highs. So so there's some resistance here. If you just want to draw a rectangle here,
Yeah.
sort of have to get through this overhead resistance, and then you'd have a more convincing bull case.
Yeah, for sure. But yeah, IWM, the small caps, they've been lagging for many years compared to large caps. So maybe they'll finally get their time, because they were trading at the same level that they were trading at back at the 2021 high. Whereas stuff like SPY Qs, they're all trading much higher above that. Of course, you've seen Apple at all-time highs. So
Yeah. So this
small
is kind of
caps.
the old highs, and if you want to draw the sort of over here. You see, we're still in the resistance region. So the thing is that the large caps are generating enough cash flow on their own. They don't need to get to the debt markets to fund their growth.
Right.
Whereas the small caps rather, they're more sensitive to rates because they have to go to the market to get, to raise money to, propel their growth, as we've seen in the various reports today. So I think therefore a rate cut is generally considered more bullish for the small stock, universe, because it's easier for them to fund their growth activities.
Yep. 100%. 100%. Well, cool. Yeah. Thank you so much again for
Oh,
coming
my
on.
pleasure.
Yeah.
And thank you for inviting me, and I hope people enjoyed the discussions.
Yeah, absolutely. I'm sure everyone enjoyed it. We're probably going to clip this video in some parts and post it up on our YouTube. So
Excellent.
maybe stay tuned for that. But yeah, if you guys just joined in, again, make sure to use the links below to check out Chande's indicators. There's tons of them on TrendSpider. We went over all of them today. You guys can rewind this video and watch it again. So yeah, it sounds like the earnings call is starting. So me and Chande will probably head off now. So
Okay.
yeah, thanks so much again, Chande.
Thank you very much.
Yeah,
Have a
have a
great week. Sure.
great
Bye.
rest of your night. Bye.
Sure. Bye.
All right, everybody. Sounds like I have the earnings call. You guys will hear it in just a second.
Podbear, Chief Financial Officer. Before we get started,
Let me know
I
if
would
you
like
guys
to
can
note
hear
that
that. If you
certain
guys are
statements
still out
made
there,
during
let me
this
know in
conference
the chat.
call that are not
The
historical
CrowdStrike
facts,
earnings call is
including
starting
those
right now.
regarding our future plans,
If you guys
objectives, growth,
want to
including
listen to it,
projections,
it is on.
and
But if
expected
you guys are out there,
performance,
let me know if it's
including our
playing.
outlook for the fourth quarter and fiscal year 2026,
Put up the
and any
chart.
assumptions for fiscal periods beyond that, are forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. These forward-looking statements represent our outlook only as of the date of this call. While we believe any forward-looking statements we make are reasonable, actual results could differ materially because the statements are based on current expectations and are subject to risks and uncertainties. We do not undertake and expressly disclaim any obligation to update or alter our forward-looking statements, whether as a result of new information, future events, or otherwise. Further information on these and other factors that could affect the company's financial results
are
is
out
included in the
there.
filings we
Let me
make
know if
with
you
the
can
SEC
hear
from
the
time to
call,
time,
just
including
so
the
I can be
section
sure.
titled Risk Factors in the company's quarterly and annual reports. Additionally, unless otherwise stated, excluding revenue, all financial measures disclosed on this call will be non-GAAP. A discussion of why we use non-GAAP financial measures and a reconciliation schedule showing GAAP versus non-GAAP results is currently available in our earnings release, which may be found on our investor relations website at ir.crowdstrike.com or on our Form 8-K filed with the SEC today. With that, I will now turn the call over to George.
Thank you, Andy, and a warm welcome to the CrowdStrike team. Andy is no stranger to many on this call, and I'm glad to have him with us to lead investor relations. I'm excited to share CrowdStrike's fantastic Q3. It was a record quarter as the business continued accelerating. On the back of record attendance at Falcon Global and Falcon Europe, the momentum we're seeing with customers, prospects, and partners drives my conviction in our near-term and long-term growth. Last quarter, Q2, we delivered our forecasted re-acceleration a quarter early. This quarter, we furthered the trend with relentless execution. Across the entire CrowdStrike team, I'm extremely proud of our Q3 with highlights including 1. Record Q3 net new ARR of $265 million, which grew 73% year over year, beating our expectations by more than 10%. 2. Ending ARR of $4.92 billion, which accelerated to 23% growth year over year. 3. Record Q3 free cash flow of $296 million, or 24% of revenue. 4. All-time record operating income of $265 million, or 21% of revenue. This is the second consecutive quarter of record operating income. 5. Broad-based ending ARR acceleration across cloud, next-gen identity, and next-gen SIEM collectively, as well as acceleration in our endpoint business. And 6. more than $1.35 billion in ending ARR from accounts that have adopted the Falcon Flex subscription model, growing more than 200% year over year. Underpinning these financial highlights is the CISO, CIO, and board feedback I regularly hear. CrowdStrike is mission critical in today's agentic society. No matter how the market swings, geopolitical tensions evolve, or what technologies are in vogue, our digital society mandates cybersecurity as a necessity. And now more than ever, synonymous with that, CrowdStrike is a necessity. Our growth is driven by pervasive, durable, and thematic market forces. Organizations of all sizes are in the midst of AI transformations, investing in the future of workforce productivity in the name of speed, scale, and cost benefits. In the midst of this societal shift, what I've shared over the past few years and quarters is unfolding before our very eyes. One, AI is rapidly expanding the attack surface. Businesses are onboarding a whole new type of workforce today, the agentic workforce. Humans using agents to do more, and agents working by themselves, each with access to data, applications, compute, and sometimes even other agents. While the benefits of this newfound workforce are exciting and increasingly vital for market competitiveness, the rapidly expanding risk profile of this realm cannot be ignored. Every single agent expands the attack surface, necessitating protection. CrowdStrike is both the armor and intelligence layer that keeps each agentic identity secure. The intelligence layer, providing visibility and context to organizations from agentic threats and risks. And the armor, protecting agents from attacks, influence, exfiltration, and data manipulation. In addition, CrowdStrike is also present as the foundational protector of the underlying technologies powering the AI revolution, providing security by design for the world's clouds and token factories. Two, the democratization of destruction wasn't just a bold prediction, it's already today's reality. Businesses every day are having jarring, light bulb moments, witnessing AI-powered adversarial tradecraft firsthand. Just a few weeks ago, a major AI company shared that China's state-sponsored adversaries were using their LLM to create and operationalize active cyber intrusion agents. This is just one of the many AI-enabled attacks we've seen. The AI cyber battleground is no longer theoretical, it's now real. Now, just as anyone can use AI to vibe code and become a software engineer, anyone can now also vibe hack, becoming a sophisticated adversary with AI. Three, cybersecurity in the agentic era demands a single platform. The criticality in being able to operate with agility, efficacy, and speed to stop breaches is having the data, the controls, and the actions in a single platform, not multiple platforms. Because when you have multiple platforms, by definition, you don't have a platform. Tab switching and context switching cost time. Data stitching doesn't scale. These are the seams and cracks where adversaries thrive. The leaky lifeboat of PowerPoint platforms and point product fragments simply cannot offer the protection, scalability, and cost benefits or the ease of use of a single platform solution. CrowdStrike wins as the market's broadest and only single platform solution. Taking my 3 points together, one, we've built the right architecture, a single console, single data backend, single sensor, agentic hyperscale platform that is frictionless and one of a kind in cybersecurity. Two, it's the right time with the rapid growth of AI agents raising the threat risk profile and driving a holistic technology shift. And three, we're in the right position. CrowdStrike's technology, innovation engine, and ecosystem position us as the operating system of cybersecurity for the agentic era. Market demand is high because the need is real. We have the right architecture, we have the right products, and we're in the right market position to continue taking share. Successful AI adoption requires cybersecurity transformation, necessitating a new operating system to create a structure around the next chapter of enterprise security programs. Falcon Next-Gen SIEM is the foundation of our platform. turning CrowdStrike into our customer's operating system for cybersecurity. Next-Gen SIEM has become a scale disruptor in a market that has historically been slow to evolve as customers embrace the speed and efficiency advantages versus legacy competitors. And with the acquisition of Onum, we're making it even easier to build on CrowdStrike with a hyper-scalable telemetry detection pipeline that brings CrowdStrike even closer to all our customers' critical data. Falcon Next-Gen SIEM had a record net new ARR quarter, a clear outcome of the deliberate strategic choices we've made over the past several years. We know that the value of the technology is only as good as the platform on which it's delivered. So we invested heavily in integrating Next-Gen SIEM to create a unified single platform. This isn't just a single console. It's a truly integrated and unified data backend that brings together all of CrowdStrike in one place, delivering not just economies of scale, but far superior outcomes. And with Charlotte as the agentic SOC orchestrator, now FedRAMP High approved, we're delivering the AI SOC of the future today. Furthering our position as the operating system of cybersecurity, we recently announced our expanded partnership with AWS. Through this announcement, all of AWS's millions of customers will have access to Falcon Next-Gen SIEM natively within their AWS Security Console, enabling them to immediately access, interact with, and analyze AWS telemetry directly in Next-Gen SIEM. Going a step further, we've also enabled federated search so that AWS customers can query their data from a single console. We're incredibly excited about what the future holds and thank AWS for both our amazing partnership and for their validation of Falcon Next-Gen SIEM as the best choice for their customers. A large European bank renewed their more than 500,000 workload EDR deployment, adding Next-Gen SIEM, Onum, and Charlotte in a large 8-figure expansion deal. With our acquisition of Onum, this financial institution was able to eliminate their existing streaming pipeline point product as well as migrate off Splunk. Competing against hyperscalers and firewall vendor SIEMs, Falcon Next-Gen SIEM won the hearts and minds of the security and IT team as the easiest solution, fastest to see value, and best agentic SOC transformation platform. Our identity business continues to perform exceptionally well. While the demand for our ITDR offering has increased, it's the launch of both our PAM and Falcon Shield offerings that has our customers increasingly excited. Falcon Shield had a record net new ARR quarter, growing nearly 50% sequentially as market demand for SaaS application security has become a mainstream necessity. Securing SaaS app misuse from human and non-human identities has never been more important or challenging. Nefarious agentic behavior is targeting data-rich SaaS applications that have quickly become a feeding ground for breaches. From on-prem apps to cloud apps, we stop these breaches. A Fortune 500 logistics company used Falcon Shield to uncover exfiltrated CRM data in less than 30 minutes from deployment, resulting in a 7-figure deal. A leading customer experience platform saw a Shield demo and activated the module via Flex within an hour. And lastly, a Global 500 personal care leader conducted a Shield assessment, uncovering 25 unknown shadow instances of their CRM. This customer quickly transacted a 7-figure expansion, bringing their SaaS environment under control. As these examples illustrate, today's elevated third-party SaaS risk environment demands visibility and protection. Falcon Shield delivers near immediate time to value and is a product that we can land new logo accounts with even without endpoint deployments. Turning to the cloud, where we delivered Q3 record net new ARR. While CrowdStrike continues to benefit from M&A-related market disruptions, it is our customers' embrace of best-in-class runtime protection that continues to push us forward. As the cloud security market matures, customers are realizing that posture doesn't equate to prevention. Security teams now understand that they need active defense within their cloud environments, and this can only be delivered in runtime. CrowdStrike is the cloud runtime security leader, as validated by the most recent Frost & Sullivan CWP report. And with our recent acquisition of Pangea, we're now positioned to protect the entirety of our customers' AI infrastructure. At our recent Analyst Day at our Falcon conference, we discussed how protecting AI is akin to protecting a building. Security teams don't want a non-integrated, fragmented series of solutions to protect their critical AI infrastructure because they know that this complexity creates gaps that are increasingly exploitable by AI-enabled adversaries. CrowdStrike Falcon Cloud Security offers customers a unified, integrated, end-to-end solution that enables secure adoption of transformative technology without slowing the end user down. A Fortune 500 consumer packaged goods company grew their Falcon deployment with Falcon Cloud Security in a 7-figure expansion deal. This customer took the opportunity to displace Wiz, bringing their cloud security program to Falcon for the benefit of our consolidated CSPM, ASPM, CIEM, and CDR approach. The outcome delivered is single platform management, better visibility, and the ability to stop cloud breaches versus simply alerting on them. This was just one of multiple Wiz replacements. In addition, Falcon Cloud Security was selected to protect a leading neocloud in an 8-figure transaction. This token factory decided it was time to secure AI from the source so that enterprises of all sizes would trust and build with confidence on them. Cybersecurity became a differentiator and business enabler, not a cost. And finally, I wanted to touch on our endpoint business. Our endpoint business accelerated in the quarter on the heels of AI-driven demand. In the world of AI, so much is being pushed to the edge. Employees are now deploying new applications such as Claude Desktop and ChatGPT directly onto their machines, driving both rapidly improved productivity and also significant new risks. This is further exacerbated by the rapid adoption of new AI browsers such as Comet and Atlas, which bring new opportunities and concurrently new vulnerabilities and threats. AI adoption is supercharging renewed interest in the endpoint, as the endpoint is the epicenter of human and non-human interaction with AI. In this new agentic world, the endpoint has quickly become the risk point, the productivity point, and the opportunity point. A large government agency took the opportunity to modernize, replacing more than 75,000 endpoints of legacy AV with Falcon, as well as deploying us in their AWS environment for cloud protection in what was a strong federal quarter for CrowdStrike. In addition, EY brought us into a Fortune 500 healthcare account, where in just a few months we were able to modernize the endpoint, cloud, and SIM environments in an 8-figure end-to-end flex expansion deal where we displaced 2 SIMs, Defender for Endpoint, and a point cloud security product. Frequently imitated but never duplicated, Falcon Flex makes it easier than ever for our customers to experience the full power of the Falcon platform without procurement friction. The Flex model cultivates more platform utilization, accelerating module adoption. Falcon Flex is an unlock, not an ELA. Flex customer ending account ARR more than tripled year over year. But what has us even more excited is the momentum we're seeing in reflex activity. The number of reflexed accounts more than doubled quarter over quarter to more than 200, with 10 customers reflexing more than 2x their initial Flex subscription. This demonstrates that Flex customers can and do increase their ARR and TCV spend with CrowdStrike, which is contrary to the ELA model, where all the economic value is realized once upfront. When we launch Flex, we believe that it would allow customers to more quickly benefit from the full value of our platform, and that's exactly what's happening. As customers and partners alike continue to embrace Flex as the best way to adopt Falcon, we expect it to become our licensing standard. Our community, or crowd, powers our technology, and that's who we build for. Our ecosystem partners continue leading us to new heights, affirming CrowdStrike's market and category leadership. Our alliance team delivered a record quarter in terms of deal value closed with partners. CrowdStrike's market position comes to light in mission-critical times. F5 asked us to partner with them to further secure their big IP hardware and virtual appliances. We rapidly deployed our sensor on big IP, which they certified, and F5 took the opportunity to purchase Falcon and Overwatch licensing for their install base in a large Flex transaction. We are pleased to be taking our industry-leading protection capabilities to new insertion points designed to enhance network perimeter protection. Today, hundreds of F5 customers are now securing their F5 appliances with CrowdStrike, many of whom weren't CrowdStrike customers prior. Partners take us into new account environments, implementing Falcon as part of their broader agentic enterprise architecture vision. Experiencing the success of next-gen SIEM in the market, EY took a bold step to standardize their SIEM practice on Falcon in a large seven-figure transaction. EY is migrating accounts for which they own and operate multiple legacy SIEM technologies, consolidating on CrowdStrike. Additionally, EY is a leading global partner of ours for next-gen SIEM implementations, taking numerous Fortune 500 accounts through the journey from legacy SIEM to next-gen SIEM migration. Deloitte announced next-gen SIEM in their MXDR practice, replacing their legacy SIEM provider. And Wipro, too, has standardized security delivery and incident response on Falcon. The GSI community is quickly seizing the SIEM and SOC transformation opportunity that only our single platform provides. The ecosystem embrace of partner-led services on Falcon is correlated to the opportunity we represent. A recent Canalys report showed that our ecosystem creates up to $7 in services opportunities for every dollar of Falcon product sales, illustrating the large ecosystem opportunity surrounding the Falcon platform. I want to return to yesterday's announcement that we made with AWS. AWS selected Falcon Next-Gen SIEM as the default SIEM for all their customers, offered in their Security Hub console. This brings Falcon Next-Gen SIEM with pre-populated AWS data to millions of AWS customers in a product-led growth motion. Our intent is to convert next-gen SIEM usage into flex subscriptions as more accounts experience the power, speed, and actionability of their AWS data, CrowdStrike data, and other third-party data in next-gen SIEM. Our next-gen SIEM helps AWS fill a critical market gap, now competing with other hyperscaler SIEMs and doing so with Falcon. Our next-gen SIEM delivers value for AWS customers, even those who don't yet use Falcon, because we've become a federated, pre-populated, and affordable security data lake for observability, triage, and threat hunting. And Charlotte is there to help operate the whole system on a customer's behalf. In addition, Accenture is our launch partner with AWS, helping AWS customers leave their legacy SIEM for Falcon Next-Gen SIEM on AWS. Our partnership with AWS continues from strength to strength, with CrowdStrike announced as AWS's Global Security Partner of the Year and AWS's Global Marketplace Partner of the Year yesterday at reInvent. We're excited about the opportunity to engage AWS accounts, onboarding them to Falcon, and serving as their operating system for cybersecurity. Lastly, I want to share a noteworthy MSSP partnership, which we've announced today with Kroll, a leading mid-market professional services firm. Kroll's cybersecurity division performs thousands of incident response engagements yearly for mid-market firms around the world, largely from their cyber insurance panel inclusion. Kroll had been using a point product EDR in their incident response and managed detection and response business. Now, Kroll exclusively uses Falcon, and in an almost 8-figure rip and replace transaction, Kroll is migrating nearly 500,000 endpoints to Falcon, which were previously running on a point product SMB EDR, and up-leveling their own MDR service with Falcon Complete for service providers, with our Falcon Complete team becoming the SOC for Kroll. This partnership announcement illustrates the value that only CrowdStrike can deliver. The best technology platform with numerous expansion opportunities to help customers and partners alike consolidate. The services opportunities partners need to see value, whether that be an incident response, proactive assessments, managed detection and response, or SOC transformation, and our scaled and agentic MDR teams to up-level partners so they can focus on selling and client services while we focus on stopping breaches as the world's SOC. We've improved Kroll's technology stack, displaced an inferior point product, improved their margins with Falcon Complete, and they migrated their entire practice to us. This transaction highlights the power of Falcon to be a business creator for our ecosystem. We're not selling products, we're delivering outcomes, introducing the world to a whole new way of performing cybersecurity and risk management. In closing, this was one of our very best quarters in company history. Acceleration is back. We're winning, and we're living the company's mission of stopping breaches. AI represents our largest opportunity and demand driver yet. We're using AI to revolutionize cybersecurity. And even larger, we're securing the world's use of AI so businesses of all sizes can adopt more AI faster, securely, and with confidence. The takeaway is this: AI adoption necessitates the right cybersecurity. It necessitates CrowdStrike. Jensen Huang summed up our market position best, saying, quote, "I can't imagine a better defender than CrowdStrike," end quote, on the stage at NVIDIA GTC in Washington, D.C. The transformative work we're doing with NVIDIA is representative of how we're securing AI at its very source, all the way down to its human and non-human users and its outcomes. I see this as a generational opportunity for the company. AI is but one of many tailwinds continuing to propel CrowdStrike to new heights. One thing is certain: whenever our customers engage in technology change and transformation, cybersecurity has been a constant necessity, and that constant is CrowdStrike. With that, we have a big Q4 opportunity in front of us, a robust demand environment, and no shortage of breaches to stop. Cybersecurity doesn't slow down for the holidays, and neither do we. Stay safe, happy holidays, and I'll pass the call over to Burt Podbere, CrowdStrike's CFO.
Thank you, George, and good afternoon, everyone. As a quick reminder, unless otherwise noted, all numbers except revenue mentioned during my remarks today are non-GAAP. Additionally, the results we are reporting today include the acquisitions of Onum and Pangea, which closed during the quarter and were de minimis to revenue and ARR. We delivered an exceptional third quarter driven by organic growth, exceeding expectations across all guided metrics. We achieved record Q3 net new ARR of $265 million, exceeding our expectations by double-digit millions and more than 10 percentage points. Net new ARR growth accelerated to 73% year over year, and ending ARR reached $4.92 billion, accelerating to 23% growth over last year. As George highlighted, our performance reflects the success of our single platform strategy as organizations prioritize cybersecurity in the agentic era and customers consolidate on Falcon as the operating system of the SOC. We delivered acceleration across the platform, with cloud, next-gen SIEM, and next-gen identity all delivering strong results. Momentum was broad-based across customers of all sizes, from enterprise to down-market and MSSPs, achieving record results in our corporate business and strong performance in the public sector, particularly in U.S. federal and higher education. Falcon Flex continues to be a powerful driver of platform consolidation, with over $1.35 billion in ending ARR from accounts that have adopted the Flex subscription model. Falcon Flex is quickly becoming the standard licensing model as it makes it easier for customers to adopt more of the Falcon platform faster. Customers continue to leverage Falcon to consolidate their security needs and lower their total cost of ownership, resulting in higher retention rates over the prior quarter and increased module adoption rates. As of Q3, 49% of subscription customers are now using 6 or more modules, 34% are using 7 or more, and 24% are using 8 or more modules. With our business momentum increasing and our all-time record high pipeline entering Q4, we have strong conviction in our ability to deliver profitable growth as we finish FY26 and look into FY27 and beyond. Moving to the P&L, total revenue exceeded our guidance range and grew 22% over Q3 of last year to reach $1.23 billion. Subscription revenue grew 21% over Q3 of last year to reach $1.17 billion, and professional services revenue was $65.5 million. The geographic mix of third quarter revenue consisted of approximately 67% from the US and 33% from international geographies, with both US and APAC year-over-year revenue growth accelerating compared to Q2. Total non-GAAP gross margin was 78%, and non-GAAP subscription gross margin increased to 81% of revenue. Total non-GAAP operating expenses in the third quarter were $703.2 million, or 57% of revenue. In Q3, we saw a typical step-up in sales and marketing expenses from our annual Falcon conference we hosted in September, which was our biggest selling event of the year and set multiple records with over 8,000 attendees joining us. Non-GAAP operating income was a record $264.6 million, and operating margin was 21%, exceeding our guidance. The outperformance was driven by our strong top-line performance, gross margin improvement, and sales execution, underscoring our commitment to profitable growth as we balance accelerating net new ARR growth with operational excellence. GAAP net loss attributable to CrowdStrike was $34.0 million, which included $26.2 million of costs associated with the July 19th incident and related matters, and $5.6 million of acquisition-related expenses. Non-GAAP net income attributable to CrowdStrike was a record $245.4 million, or 96 cents on a diluted per-share basis, exceeding our guidance. Moving to cash, our cash and cash equivalents were $4.80 billion. We generated record cash flow from operations of $397.5 million and record Q3 free cash flow of $295.9 million, or 24% of revenue. Payments for incident-related and strategic plan costs impacted Q3 free cash flow by approximately $53 million. Moving to our outlook and modeling notes. The AI-driven demand environment, combined with our record pipeline and the continued momentum in customer platform consolidation on Falcon, gives us strong conviction as we finish Q4 and look toward FY27. While we do not guide to ending ARR or net new ARR, our revenue guidance includes the following assumptions. Low to mid-teen sequential net new ARR growth Q3 to Q4, bringing ending ARR growth for FY26 to 23% year over year. At the midpoint of our net new ARR assumptions, we expect second half net new ARR growth of at least 50% year over year, well above our previously provided assumptions of at least 40% year over year, driven by our strong Q3 outperformance and record pipeline. Additionally, we continue to expect FY27 year-over-year net new ARR growth of at least 20% from our now increased FY26 net new ARR assumptions. As we discussed during our September investor briefing, as a result of our successful CCP and related partner programs, our ARR to subscription revenue assumptions include a separation of $13 to $15 million in Q4. Consistent with what we noted at Falcon, this gets you to the midpoint of our FY26 revenue guidance, which we have raised by $24.1 million at the midpoint to reflect our strong Q3 outperformance and record pipeline. We ask that you please be mindful of these dynamics when updating your models. Moving to cash, we expect Q4 free cash flow margin to be 27% and include cash payments of approximately $33 million in connection with incident-related costs. This brings our full-year FY26 free cash flow margin expectation to 25%. Finally, we remain confident in our previously provided assumptions for FY27 partner rebates, non-GAAP operating margin, and free cash flow margin, which are detailed in the modeling assumption slide of our Q3 FY26 earnings presentation, available at ir.crowdstrike.com, following our prepared remarks today. Moving to our outlook. For the fourth quarter of FY26, we expect total revenue to be in the range of $1.290 to $1.300 billion, reflecting our year-over-year growth rate of 22 to 23%. We expect non-GAAP income from operations to be in the range of $315 to $319 million, and non-GAAP net income attributable to CrowdStrike to be in the range of $282 to $287 million. We expect diluted non-GAAP net income per share attributable to CrowdStrike to be approximately $1.09 to $1.11, utilizing a 21% tax rate and weighted average share count of approximately 258 million shares on a diluted basis. For the full fiscal year of 2026, we currently expect total revenue to be in the range of $4.797 to $4.807 billion, reflecting a growth rate of 21 to 22% over the prior fiscal year. Non-GAAP income from operations is expected to be between $1.036 and $1.040 billion. We expect fiscal 2026 non-GAAP net income attributable to CrowdStrike to be between $950 and $954 million. Utilizing a 21% tax rate and approximately 256 million weighted average shares on a diluted basis, we expect non-GAAP net income per share attributable to CrowdStrike to be in the range of $3.70 to $3.72. George and I will now take your questions.
Thank you. If you would like to ask a question, please click on the Raise Hand button, which can be found on the bar at the bottom of your Zoom window. You may remove yourself from the queue at any time by lowering your hand. When it is your turn, you will hear your name called and receive a message on your screen notifying you that you may unmute yourself. In the interest of time, participants will be limited to one question. Our first question will come from Brian Essex with JP Morgan. Please unmute and ask your question.
Great. Thank you for taking the question and nice results. And Andy, congratulations on the new role. Maybe for George, great to hear the acceleration in the endpoint segment of the business. And I know you guys aren't giving any update until year end on the emerging segments of the business, but could you offer a little bit of color of how those segments are behaving as you kind of lap the initial CCP initiatives of last year? And then maybe for George, maybe for Bert, I know you're not offering any kind of impact from Pangea and Onum on ARR, but any sense of the seasonality, organic seasonality for net new ARR? Thank you.
Hey, Brian, thanks. Yeah, when we look at obviously the emerging products, which was the heart of your question, they performed fantastic. If you look at Next Gen SIM, it's been an all-star standout for us. We've seen just incredible results from a customer perspective and what they're able to do and driving down the cost and get better outcomes. Identity as well, that's key to the securing the AI in an enterprise. And then obviously cloud, we talked about some of the big wins throughout the quarter. So when we look at those segments, and as you mentioned, we'll be reporting out on those next quarter, we're very, very pleased on the results, and customers are embracing the technology and the consolidation the single platform delivers. So from that standpoint, I think we're very happy. And then as we lap the CCP, CCP was designed to do exactly what we delivered, right? We helped customers through a situation, and also we provided a way to accelerate Flex adoption, and we've seen that with our Flex license adoption throughout the quarter, which we called out. And then obviously we had a fantastic endpoint quarter, which continues to help drive all the other modules. So overall, I couldn't be happier with the quarter that we just put up.
Yeah, and on your question with respect to Pangea, I think that I called out that we have got a de minimis impact from both the revenue standpoint and net new ARR, and we're excited that those are going to roll into the platform in Q4. So that's how we think about it.
Thanks for the question, Brian. Operator, next question.
Your next question will come from Saket Kalia with Barclays.
Okay, great. Hey guys, thanks for taking my question. Great quarter, and congrats, Andy. George, maybe for you, I just want to pick up on your comment earlier on SIM. It feels like the SIM market is starting to see more velocity of displacements. Can you just maybe talk about what sort of value you're able to capture in those opportunities compared to what customers were maybe spending before? And then maybe relatedly, how do you kind of think about the timetable for legacy SIM renewals in the coming quarters, years, which of course I imagine you'd be targeting? Thanks.
Yeah, so I'll try to wrap this up into one answer here. But Saket, let me just kind of lay this out. If you look at the journey that we've been on and how we've been able to replace legacy AV, it feels a lot like that market in the early days when we think about replacing legacy SIM. Customers are looking for better outcomes, they're looking for faster results, and they're looking for lower cost. And because we already have the EDR data in the platform, we can offer disruptive pricing versus our competitors. The stickiest data that's out there is the EDR data, and we already have it. And really what it becomes is a journey to activate next-gen SIM for our customers. So when we think about the opportunity to work with customers and how we get in and the opportunity going forward, keep in mind, all of our customers are next-gen SIM enabled. All of our customers are next-gen SIM enabled. It's a huge difference between us and everyone else in the marketplace. And all we need to do is go through the licensing exercise, and Flex is helping to accelerate that. So we can offer competitive, disruptive pricing, and then overall grow our total wallet share with a customer over time. So it's a multi-year long tail journey that feels very similar to the displacement of legacy AV.
Very helpful.
Thanks,
Thanks.
Saket. Thanks, Saket. Operator, next question.
Your next question will come from Matt Hedberg with RBC.
Great. Thanks for taking my question. Congrats from me as well on the quarter, and Andy to you as well. George, building on your next gen SIM success and Onum, and a little bit related to Saket's question, do you see a further push into observability? Obviously, there's been some movement with some of your cyber competitors to go deeper into observability. Just curious on kind of how you view that market, and is that a consolidation opportunity for you as well?
Well, we do view it as a consolidation opportunity, and I'll remind everyone on the call that when we acquired Humio, which became LogScale, 50% of their business was actually in observability. So we have all of the technology, and in fact, because the platform is collecting so much data and so much telemetry, we have customers today that are using it for observability use cases. You combine that with our agent technology, which does deep inspection within its platform, and we have data that goes well beyond security data that is already being consumed by customers. And then you combine that with Onum, the pipelining technology, the data fabric, which again has the ability to take IT data, and we have a fantastic opportunity in front of us to consolidate in those areas, which, again, this is nothing new to us. We've actually been doing this, and this has been, part of our selling motion as well as what customers are embracing. So it's already there, and there's certainly more that we can do, and certainly more we will do.
Great. Thanks, Matt. Operator, next question.
Your next question will come from Gabriela Borges with Goldman Sachs.
Hi, good afternoon. Thank you. Question for Burt. So CrowdStrike has years and years of data on customer cohorts and how your customer cohorts typically expand with you over time. You've now got several quarters of data on Flex and how the Flex customers expand with you over time. There's a piece of this which is structural, which is you're making it easier for customers to consolidate with you. But I'm wondering if there's also a dynamic where you see an elevated tailwind to NRR for a period of time because of Flex, and Flex starting with your best and most excited customers, and then perhaps normalizes lower. So my question for you is, how do you think about that dynamic? How do you think about the tailwind that Flex is driving in the model and how sustainable that is? Thank you.
Thanks, Gabriela. So the way I think about this is our Flex licensing, it's continuous. Net ARR will be continuous throughout time. And the beauty of this whole program is that it's designed for customers to easily buy more. So over time, we're excited about the opportunity as we bring more products to market and offer more availability to our customers easily. And I think that's the biggest piece that everybody on the call should just remember, is that that's exactly what Flex was designed to do. Make it easier for customers to buy, make it very easy for us to be able to deploy and be able to give value and lower TCO. That's how we think about it. And the benefit is that we're seeing bigger deals and longer deals. And that's all good for us, and it's great for the customers. And I think the most important thing is, and not get lost in things I've just said, is consolidation. We started this company talking about consolidation, the ability for customers to do more with us, spend more with us, and lower their total TCO, but spending more with us. So I think that's the biggest point that I want to drive home.
Thanks, Gabriela. Operator, next question.
Your next question will come from Dan Ives with Wedbush.
Yeah, thanks. And also congrats on the Mercedes deal, George. Can you just talk about AI? Like as you're starting to see more and more deployment, talk about how that's changing the conversations with customers, even over the last 3, 6, 9 months relative to where CrowdStrike sits. Can you maybe just give some insight into how those have changed from your perspective?
Yeah, great. Thanks, Dan. Thanks as always. When we think about the conversation of AI, what customers have realized is that CrowdStrike is probably the only company in security that's moved beyond chatbots. And what I mean by that is Charlotte AI and its related agents are deeply embedded into the platform. At our last Falcon in Europe, we talked about 11 AI agents and AgentWorks, which allows our customers to actually create their own security agents, which we think is going to be a massive opportunity for us. So it's moved from chatbots to actual doing work. And this is something that we continually hear differentiates us from our competitors. Our competitors are still stuck on chatbots, where we've done the orchestration within the platform. We've created models around each of our modules, and we're delivering results. Things that would take 4 days of work, we're delivering in minutes for customers. And at the various events that I was at, both in Las Vegas for Falcon and in Europe for our Falcon in Europe, I had customers talk about just the evolution of Charlotte, the maturation of it, and how it's become a key part of their success in their SOC. And it gets back to what I've said earlier. CrowdStrike has become the operating system for the SOC, and Charlotte is a big piece of it.
All right, thanks, Dan. Operator, next question.
Your next question will come from Joseph Gallo with Jefferies.
Hey guys, thanks for the question, and congrats, Andy, on the new role. It was awesome to see you guys maintain the fiscal 27 net new ARR growth of 20% on higher numbers. You mentioned several key components of the business accelerated in 3Q. Is there one or two products that you think have an outsized growth impact for upside next year? And then as a part of that, security for AI feels necessary, but very early. Is that accounted for in your preliminary fiscal 27 guidance, or is that more longer term? Thank you.
Yeah, sure. So I think when we look at next year, again, seeing the momentum that we talked about with Next-Gen SIEM, again, it's an all-star product. It delivers a lot of value, which is key in this market when you're talking about consolidation. And it's enabling customers to do things that they haven't been able to do. And I think one of the areas that maybe is really not appreciated is that many organizations of all sizes are making a decision in the past to not collect certain data because of the cost. With CrowdStrike, we can actually open the aperture and we can provide value to collect all that data. So in general, we're expanding the wallet share, but we're giving them more value because we're collecting data they've never seen, and we're giving them outcomes that weren't available to them previously. So I would look at that as an all-star. I would look at cloud. We look at the displacements that we talked about in the call. We talked about the runtime protection, which is key. Customers want that protection. And then we look at Falcon Shield, which is, again, cloud and identity, but it is a key technology to help protect the SaaS application. So these are all fantastic opportunities for us, in the coming year, and we'll continue to double down on them.
All right, thanks, Joe. Next question, please.
Your next question will come from Fatima Boolani with Citi. Fatima, you may unmute and ask your question.
Oh, here I go. Thank you for taking my questions. George, I wanted to direct this to you. You gave us a lot of information about your strengthening partnership with AWS. Your proximity to AWS as a customer and a very, very strategic partner has only cemented further. So I wanted to ask you a very high-level strategic question. This proximity that preclude you or influence you or potentially maybe even complicate your relationship with other hyperscalers and your customers who would typically, presumably have multi-cloud infrastructure footprints. Would love for you to sort of dive into some of those dynamics a little bit, again, just by virtue of the strengthening partnership with AWS and the availability of the full Falcon suite in a very deep integrated way inside AWS. Thank you.
Yeah, so first, we couldn't be more excited about this partnership. And really, I think this is something that's going to be incredible for AWS customers as well as customers at CrowdStrike. And the fact that now natively, you can actually flow data from AWS into Next-Gen SIEM. It's right in your console. And it's going to be a tremendous enabler for new customer acquisition. And it's a needed technology for AWS customers. So, overall, fantastic relationship, and we're excited to be deeply integrated. And when we think about the current environment, as there's always an area to cooperate with many different companies that are out there. Just look at the AI space and, how many people work with different companies that are out there. I think if you look at that and you apply it to security, of course, we're going to work with other players that are out there. They're going to leverage the best technology in the market, which is CrowdStrike, and we're there to support all of our customers and potential partners. So it doesn't preclude us from doing that, but again, I think this reinforces what a great relationship we have with AWS, how we've been able to partner with them, not only in the technology side, but also in the marketplace. And you've seen the evidence of that by the awards that I called out. So overall, extremely excited about what the future brings.
Thanks, Fatima. Operator, next question, please.
Your next question will come from Meta Marshall with Morgan Stanley.
Great, thanks. You noted core EDR acceleration in the quarter, and you kind of noted AI as a catalyst for that. But just, is that kind of more endpoints getting protected, or as they become more intelligent, or just existing customers looking to modernize as part of general AI adoption?
Sure. When you think about endpoints and the adoption of AI, a lot of it takes place at the endpoint. Think about all of the various technologies that are out there where people are running these as a user on their endpoints. I mean, we've seen some big announcements from consulting firms and others that are leveraging AI in their business because they have to, and they have to drive efficiencies. So what that means is that creates opportunities and exposure for companies. So they're going to need to monitor what sort of queries go in. They're going to need to monitor what data comes out. They're going to need to monitor what other services are connected into those AI desktop technologies. And that becomes another threat vector. So this becomes a catalyst. Again, I think this is underappreciated as a new risk vector that we hadn't had over the last number of years. Now with the adoption of this isn't AI creation, it's AI adoption. And that's, I believe, is going to be a massive market opportunity for us. So that's where we see that. And, overall, as I always say, 50% of the market is still legacy AV, and there's still a long runway in the endpoint business to be able to take that legacy market share.
Thanks, Meta. Operator, next question, please.
Your next question will come from Patrick Colville with Scotiabank.
All right, thanks, Andy, for having me on. I guess this one's for George. I want to ask about discounting levels, because if I think about this time last year, we had the CCP program, but we also had CrowdStrike, very correctly being aggressive to cement and extend its position through, through discounting. That was the right strategy, and these results prove that. But as I think about, the quarter we've just had, fiscal 3Q, and as we look towards fiscal 27, I guess, can you just talk about how you're thinking about just discounting and normal course of business discounting? Are those levels going to diminish over time as we have the Falcon outage further and further in the rearview mirror and your position's looking very strong?
Sure. Well, I think when you look at this market and you look at, say, enterprise sales, I mean, there's always some level of discounting. That's not unique to us. It's not unique to security, and it's not unique to software companies. It just happens as a normal course of business. And I think we've been very prudent in how we operate in those areas. And we've tried to focus on things like CCP, which again allow customers to take new technologies in, but protect the price point and allow us to basically capture them in a flex opportunity. So we're going to use the tools available to us to be competitive. We continue to take share. We continue to drive new customer business. And, we don't see anything out of the normal course of business, but we've got various tools in our toolbox, and we tend to use those judiciously and where it makes sense for us and for the customer. And that just drives the growth that you've seen. And I'll also point out, the 81% gross margin. Like, you have to look at the margin as well. And we've been able to be successful, and we've been able to protect the margin.
Thanks, Patrick. Operator, next question, please.
Your next question will come from Eric Heath with KeyBank.
Hey, great. Thanks for taking the question. Nice set of results. George, I wanted to ask about the partnership with F5. I thought that was pretty interesting, but correct me if I'm wrong, but I believe this part of the infrastructure stack historically was never able to support endpoint agents before. So Does this expand the endpoint TAM? How meaningful can this be? And are there other areas of the infrastructure stack you think this is applicable to?
Yeah, this is a great and insightful question. I'm really glad that you asked it because it does. And what we've seen over the years is that customers have been asking for a long time to protect these appliances. And in many cases, the appliances have not been available to us, the underlying operating system, if you will, to be able to protect, but there's been a huge demand there. So we worked with F5 in great partnership and very quickly to be able to certify our agent to run on their platform. And we do think that this will create a model, a working model, that will open it up to other appliance vendors to be able to have it protected. And I can tell you just some anecdotal stories. You know, there was a story just last week of a non-customer, never used CrowdStrike, had the opportunity to actually use our technology because of F5 and was blown away. And within a week, we had him in an EBC, and now we're getting into a proof of value. So this play works, and we're going to expand our market and be very forward-leaning in being able to protect other appliances that are out there, which you probably have seen are the tip of the spear for many of these nation-state breaches.
Thanks, Eric. Operator, next question.
Your next question will come from Roger Boyd with UBS.
Great. Can you hear me okay?
Yes.
Awesome. Well, congrats, Andy, on the new role. I wanted to double click on the Kroll partnership. I know MSP has been a growing part of the channel for CrowdStrike for the past couple of quarters. Can you walk us through that longer term opportunity as you expand with Kroll and other beyond kind of the initial endpoint landing spot? Thanks.
Sure. Yeah, we were excited about this opportunity. We took out another EDR vendor that was in there. We're providing a much better solution for them and their customers, and they're in a segment that allows us to bring our technology to. You know, there's a lot of incident response engagements they're doing. They're part of the insurance panels, and it opens up a market opportunity with one customer and just accelerates our ability to penetrate that. So these are the type of models that we like to create. We've been very successful in the MSSP market. This is just another proof point of us working with customers like Kroll and the reach that they have and the trust that they have. So the idea is to create more Kroll opportunities and certainly grow the opportunity that we have with Kroll, which I feel very confident we will.
Thanks, Roger. Operator, next question.
Your next question will come from Tal Liani with BofA.
Hi, guys. I'm trying, you're a $5 billion revenue company and you only provide one number, revenue or ARR. There's no breakdown. So I'm trying to understand a little bit of the kind of any segmentation of your revenues. And the question I have is, can you discuss verticals like contribution of SMB and trends in SMB, kind of new market opportunities that were not in your core before and how you're addressing them? And also new customers versus upsell to existing customers. Are you disclosing NRR and GRR? I know you stopped doing it a few quarters ago. Thanks.
Actually, let me take the last part of your question first. So basically, we are going to be giving out dollar-based net retention and gross retention rates at the end of the year. So that's what we've talked about, and we will do that, Tal, at the end of Q4. So and we do it every Q4. So I think you'll get that information. Now, with respect to breaking out, how we think about our business, whether it's enterprise or SMB or MSSP, the great news about our business is that we sell all of it. We're successful with all of it. We're successful with small deals. We're successful with large enterprise deals. And for us, we have that great technology that it's the same. It's the same technology for if you're a 5-person shop or you're the largest company in the world. And the beauty of how we're able to deliver our technology is that it's up and running in seconds. So when you think about segmentation and you think about who we sell to, it really is everybody. Our ability and our success is agnostic. We are really driving new wins and displacing competitors on a daily basis, right? And for us, to continue to invest in the business, and for us to be able to continue to make sure that we're able to deliver in a very timely manner, these are the successful things that we look at to be able to sell to all
of our customers, whether big or small. So we're excited about that. And we're also rare in the entire security community to be able to do that successfully.
All right, thanks, Tal, for the question. Operator, next question.
Your next question will come from Mike Cikos with Needham.
Hi, this is Jeff Hobson on for Mike. Thank you for the question. With the increased amount of M&A activity in security we've seen this year, including CrowdStrike recently, how are you guys approaching the buy versus build when it comes to a technology like AI that's developing pretty quickly? Thank you.
Well, when we look at the market, certainly there's a lot of activity out there, and it probably isn't a week that goes by that we don't talk to some bankers that are talking about other companies. The great news is we've got a tremendous balance sheet. We're in a fantastic position to be able to build or buy or partner, and I think we've been very thoughtful about our acquisitions. And a big part of our strategy has been the integration. When you look at Pangea, we're really starting to sell that in Q4 because we wanted to take the time and effort to integrate it. It's not just kind of stitched together. The single platform, which I talked about, is very important to our customers. So we're going to continue to be thoughtful. We're going to continue to buy what we perceive as best of breed in the market, not legacy technologies. We're going to integrate them, which is part of our customer brand promise. And we're going to continue to grow them within our sales motion and the channel that we built. So we'll be opportunistic, but we'll also be very strategic in what we buy.
All right, thanks for the question. Operator, last question, please.
Your last question will come from Adam Borg with Stifel.
Awesome. And thanks so much for the question. And Andy, congrats on the role. Maybe just on the identity business, it's great to hear the stronger quarter there qualitatively. I know we've talked in the past about PAM being almost like a 1.0 product. Love to hear more about how you're thinking about that product in particular and the maturity in coming quarters. Thanks so much.
Yeah, so identity, as we mentioned, super important in an AI era. Something we got into many years ago, and we continue to evolve that. And we've seen some really nice wins specific to our PAM technology. We have to look at what customers are telling us and basically skate to the puck of where they're going, which is they're looking for more modern identity solutions. They're looking for solutions that can do just in time and some of the kind of legacy vaulting they'd like to move away from. So those are areas of focus for us. We'll continue to build out our identity stack. It's been very successful for us, but certainly there's more to do. There's more to build out, and there's more opportunity in front of us. The good news is there's demand from customers, as you've seen lots of market movement. And as customers think about what they're going to do next, they want to make sure they set themselves up for really in the next era of agentic identity, and CrowdStrike will be there for them.
This concludes today's question and answer session. I would now like to turn the call back to George Kurtz for closing remarks.
Thanks everyone today for your time. We appreciate your continued support. We'll actually be presenting at the UBS conference tomorrow, and a live webcast and replay of the presentation will be available on our IR website. And we look forward to seeing many of you at the conference. So thanks so much. Stay safe, and we'll talk soon.